All right, looking good. Should be live. Let's get this party started. Welcome back to the channel, Crypto Trend Trader, with our midweek market update. It is January 19th, 2022, 8 p.m. Eastern Standard Time. Before we get started, I'd like to remind you this is not financial advice. I'm not your financial advisor. These markets are extremely volatile, so please do your own research and trade responsibly. Welcome back. Welcome back. So, lots to talk about. Markets are getting crazy. Lots of action. I mean, it's funny too. I listen to, these big talking heads, these YouTube clowns, CNBC, all these big names. They sound like, what are those guys called? Like hostage negotiators, trying to like talk people off the edge. Like if you got to come out here and talk people down, you've been doing a poor job preparing them for the inevitable. If you got to come out and calm them down. Unless they just tuned in and just found you for the first time and you're talking down somebody else's hostages. Oh, it's crazy. Absolutely crazy. So obviously markets are selling off pretty heavy across the board. Seeing a little bit of a pop from gold and silver over the last couple of days. Seeing quite a bit of strength from TNX, or like interest rates, yields on the bonds. Dollar having a little bit of a bounce, sort of hanging out in neutral territory. Cryptos are just slowly melting down. Stocks started to have a little bit of a bounce today after selling off and basically closed at the lows, looking absolutely terrible. So let's dive right in and we'll just rip on through these because we have got a lot to look at. So TNX, obviously once we broke above this previous cycle high from March 30th of 2021, that was basically, we have a macro low and now we have a new macro high. So at this point in time, we expect continuation to the upside. We are at 1.828 on the 10-year treasury yield. So that means that the bonds are going to keep melting down. It was something crazy. I think bonds lost like 10% of their value in a single day, single week, whatever. With this move up here recently, depending on what duration bond you're looking at. So if your bond is yielding 1 or 2%, let's say 2% bond, and you're expecting to get 2% per year, you just lost 5 years in yield in a single, week of trading. So that's my point about bonds. You literally get nothing for them and you risk everything. Because, yeah, you lock in a sweet 2% yield at the cost of what? All the risk in the world if prices melt down. And I mean, at this point in time, we know what's going to happen. So, we've been right. We've been on top of this. The yields are obviously in an uptrend. The Fed is only just now talking about tightening. We'll hear from Powell this week and see what he actually does. I suspect it's probably going to be worse than the markets are thinking. Right now, they're pricing in like 3 25 basis point yield hikes. I think more realistically, they might even come in with a 50 basis point hike. 0.5%. We might see balance sheet taper by March, or asset purchases taper by March. And now they're talking about balance sheet reduction, which before they hadn't even mentioned. So in my opinion, we're in the danger zone. Not that we didn't expect it. We've been talking about this ahead of time. We talked about the end of the year, beginning of the year market shift. We talked about how things were shifting into potential bear markets across the board. And, we have an easy quantifiable way to tell. So we don't even have to guess. We don't have to wait and see. We can just look at the charts and let the chart tell us. We don't really need to look at TLT. Oil obviously making new highs here. Coming back up here again, putting in a new high. So let's check our little divergence action right here. We did put in a new high on our indicator oscillator. We did put in a new high here as well. So at this point in time, we have basically invalidated the daily triple bearish divergence. If we flip over to the weekly, don't worry about that little wick. If we flip over to the weekly, though, we will see we have our first drive of divergence here, the second drive of divergence here, third drive of divergence here, and now we are essentially at new all-time highs. We have already closed. Let me turn off the drawing tools. we have already closed this candle here at a new all-time high. So, or not all-time high, but cycle high. So we now have like a fourth cycle high right here. And then again, if we come down here and look at our indicator oscillator, we have 1, 2, 3. And now the indicator is way down here, the stochastic. So we're basically at, with the blue stochastic, at like 62 roughly. And the previous peak, the third lower high, was at 92. So this thing could literally run up 30 points. It's already put in a new high on price action. But if it closes anywhere lower than this previous peak, it's going to be a fourth drive of bearish divergence. And again, if we look at the TJD TDMACD, we have one drive, we have two drive, we have a third drive. And now here's our fourth one. Again, we're down here at 2.33 right now. And our previous peak was at 4.22 or 4.24. So we could literally run up another like 2 points and put in a fourth drive. So we got to be real careful here. The trend has obviously shifted. We flipped the slope line over red. We're underneath it. The most likely thing that we've seen over and over and over again is this will continue to run up. It will hit the slope line here in red and then get rejected there. It'll put in our fourth drive of bearish divergence on the weekly, and then we'll see the breakdown of oil. Will we actually come back down and retest the 200 exponential simple moving averages on the weekly? You know, I don't know if we're going to make it down there. The previous couple times when we have tried to get down there, we actually put in the bullish divergence as well. So we bounced prior to even getting there. We don't need to. We know this has shifted over into a macro uptrend. I'm extremely bullish on oil, but to tell you the truth, this trade is extremely overcrowded, in my opinion. Does it have to pull back? No, but we'll see how this ends up looking. I have a feeling this is going to close looking like a topping candle, and then we're going to see this weekly pullback, and it's going to be another heavy one back down into the 60s. Now, that can change. I could be wrong. I will gladly be wrong. You know, that's fine. But to tell you the truth, this daily looks like a topping candle. You know, we basically have a shooting star rejection and then a gap down here. I don't think it's unrealistic. We come back up, fill the gap at like 86, and then continue to melt back down here. You know, again, we don't have to come down to new lows. Oil doesn't have to get crushed. It doesn't have to be anything like that. But, I mean, at this point in time, the way that weekly chart looks, it's going to be, I mean, oil will be at like $120 by the time we don't print bearish divergence, and a fourth drive on a weekly is extremely, extremely reliable. So third drive is usually pretty nice. Obviously, off the third drive, we pulled back from like 85 down to 62. I was not convinced that was the whole move, but it's, I mean, it could go either way, but nothing has changed for me. I definitely think that, I think we're going to see further pullback on oil. Now, could this be the blow off top? Could this be like the legit melt up in oil that takes us up to like 100 or 105 or 120? I mean, it could. We'll have to wait and see, obviously, but this is, it's looking just as toppy as it did before. We see the VIX is shooting up to the upside. So we have technically broken out of our neutral zone between our dotted lines. We're now at the top of this channel, this descending channel we've been paying attention to. We know that if we get a breakout of this channel, we got one right here and it kind of failed. We know if we get the actual breakout, the measure move, you know, it's just from the bottom of the channel to the top of the channel. We know that's basically going to take us up to the red zone resistance. And we know that, you know, the higher this gets up here, the volatility on the S&P essentially is corresponding with, you know, the S&P or overall traditional markets just getting wrecked. So obviously we are seeing some pressure in those markets. If that continues, we would expect the VIX to break out and then possibly even approach this zone here. Now keep in mind, when we saw this massive spike right here, that was that CVD spike. So if we get inside of this historical red zone, I mean, that is like complete market like meltdown. So, you know, obviously this is going back to 1991. We see there's a handful of times, like 2 times here. We saw the big crash in 08 right here. This is like we didn't really get like the same kind of crash. I mean, this was like 98, you know, 2002. We didn't really get the same aggressive spike like that. This is 2008 where we basically maxed out and put in a new all-time high. This was CVD. We had a couple of touches along the way. So if we get back into that zone, I mean, historically, that's business. So we'll see what happens with that. I have a feeling that we may be breaking out and seeing that measure move play out. I don't know how high it'll go. I don't know how long it'll last. I don't know what the Fed's going to say or do. But at this point in time, I mean, it's very clear that they are trying to attack inflation. But, you know, this is what happened just from Powell taking off his like little dove costume and revealing like, haha, it was me the whole time. I'm still a hawk. I was just waiting to get renominated. So what's going to happen when he actually does something, when he actually makes a move, when he actually does like an actual hawkish move? Because right now he's just said, hey, I'm not a dove anymore. I'm going to be a hawk. All he did was just tell the truth, but he already has been telling the truth. People are like, oh, Powell said he was going to be transparent. And now all of a sudden he's like getting all aggressive. It's like he's been saying it the whole time. He just doesn't say it in like plain speak. I mean, every time we've listened to him talk, we've been able to accurately predict based on what he says exactly what he was going to do. So this is not a surprise at all. So here we see Dow Jones tried to bounce and then just completely melted down. At the 200 simple, we know that this entire run up, basically from the bull market, this was October 2020. We have only touched the 200 simple and 200 exponential both, like one time here, and then once right here on that little dump back in December. So we know realistically, this is danger zone. If we come down to the 200 exponential, which is 34,518, that will be only the third time in this entire, basically bull market that we've seen that happen. If we break down through it, that will be a change of trend. That will be the first sign of serious danger. Now we do have a bunch of support around this range, so we'll see what happens, but there's still quite a bit of support, quite a bit of chop right here. So I'm not going to just throw in the towel quite yet on the Dow, but it's looking like there's definitely some potential. So got to be real careful with this. And again, if we flip over to our weekly chart, none of this is a surprise because we've been talking about this for, literally put in our first drive of bearish divergence in May, put in our second drive of bearish divergence in August, our third drive of bearish divergence was in November, and now here we are putting in basically a fourth drive, or arguably you could treat this as still one drive right here, and this is just basically a double top of the third drive of weekly divergence. And again, we're seeing that on basically this and the S&P, telling us these are potentially topping out. So what I'm looking for here on the weekly is, again, we talked about 200 exponential. We talked about a change in trend. We talked about things actually being different this time, not just, people saying that or whatever, saying, buy the dip, buy the dip. Markets only go up. We know right here, the 8 and 21 on the weekly crossed to the upside in June of 2020. We know that for a fact. And we know since then, they've been green, both of them, and crossed to the upside the entire time. So if this crosses right here, which we're well below it at this point in time, if this crosses down and we confirm the 821 cross to the downside, we know that that's going to be a change of trend. The last time that happened was the CVD dump, at which point in time, from the cross to the bottom, that was right here, to, again, this is from the cross to the trough. So from the cross to the tip, you're not always going to get the tip, but, sometimes you get just the tip, sometimes you get the whole thing. You never know. 35%. So 35%. The time before that was our breakdown here in 2018. And from the cross to the trough was a 15% move. So we know that this time we didn't quite come down to 200 exponential and simple. This time we completely violated them. There was a police report filled out. They're still looking for the perp. So in this case, we're extremely far away from those moving averages. So if we even get remotely close to them and we start retesting, like say we just come back and fill this weekly gap back here from October, we're talking about a 20% move, and that's going to take us down to 200 exponential and simple. Does it have to happen? Can it happen slowly? Does it happen in one candle? Do we not even get there at all? Then I'm wrong and we just go back to the upside? Sure, those are all possibilities. But the fact of the matter is, until now, there was no real reason to get bearish in these markets or to get scared in these markets or to even be like, dare I say, defensive. But the fact of the matter is, we were at this price action in May of 2021 on the Dow. So anybody that purchased the Dow since May to right now is right back where they started. So how many new investors, how much new money came into these markets in the last 10 months? A lot, because that's all people have been doing is adding money, putting on more money, every bit of money they get, just piling into these markets. So if we start to actually sell off from these levels, we've already wiped out almost a year So, I mean, not sure if I'm making my point, but this is what I've been getting at. Easy come, easy go. So let's look at the S&P now. So S&P, same thing. Breaking down from key levels at key support. We showed some bearish divergence here between these peaks. We're having a meltdown. We see the 821 cross. We have the 200 exponential and simple below us at 439. If we switch over now to the weekly, what do we see? We see the same signature. We cross down right here on the CVD dump from the cross to the trough. From the drip to the tip, we're talking about 31%. Okay, 31% down. So again, look how much further extended we are from the 200 exponential and simple. Here when we broke down, we weren't that far above it. Here when we broke down, we weren't that far above it. Now we're way, way above it. Higher than we've literally ever been on this entire chart. So just the reversion to the mean, just the retest of the 200 and then continuation to the upside is more dangerous than ever now. And again, we see triple or arguably quadruple bearish divergence on the weekly. And if, keep in mind, this was 821 cross, bullish the entire time. If we break down here, if we cross 821 back to the downside, we're talking about from the cross just to the 200, a 24% move. So, according to Wall Street, that is a bear market. You guys know that I go by the actual slope of the 200 exponential and simple. So technically, I would not consider that to be a weekly bear market. But obviously on the daily, that would be well into a bear market zone. So we obviously do not want to see that happen. Typically, that does not happen. I mean, these things literally only go up. We see the last weekly bear market was basically 2008. And then if we go back before that, the weekly bear market was basically the 2000 crash. So these aren't just pullbacks. These aren't just little recessions where the Fed comes in and, pumps markets back up. These are full on like elongated crashes. We see from the top here in 2000 to basically the bottom was 2 years. We see till the cross back to the upside from 2000 to 2004. So we see basically 4 years. And we know that from 2000 to 2008, that was an 8-year period where we did not touch the highs again. And then we actually went down into another bear market, a deeper one. And then if we go from 2000 until when we took out the 2008 high, and then finally we're back into a bull market, we're talking about 2013. See, people forget about that from 2000 to 2013, the stock market did not make a new all-time high. So when people say stocks only go up, I'm buying the dip, I'm dollar cost averaging in. If you ever bought into Bitcoin or the stock market, you're fine. All you have to do is just wait it out. That is true. That is true. Bitcoin has always put in new all-time highs. The stock market in the United States has always put in new all-time highs. But let's just remember that it has taken Bitcoin 3 years to put in new all-time highs, previous cycles, and it has taken, on many occasions, the Dow Jones or the S&P 500, in this case, 13 years to put in a new all-time high. So just be prepared right now when this is the pullback we saw so far. This little itty bitty pullback. Now, I'm not saying we have to just get wrecked here. I'm not saying we have to go into a 13-year bear market, double top, sideways price action and see time capitulation or price capitulation. I'm not saying that has to happen. But what I'm saying is when you evaluate for risk and reward, when you look at your positions and say, I'm just going to hold it, I'll just buy the dip. Just be prepared that the dip may last for 13 years. That it may be 20 or 30 or 50 or worse percent to the downside. So just make sure I don't need this money for 13 years. I'm not going to need to retire for 13 years. I don't mind. I have diamond hands. I will hold my AMC or my S&P or whatever for 80% downside in 13 years. I'm comfortable with that. And I'm going to add on the way down. As long as you can say that honestly to yourself in the mirror, I wouldn't worry about it. I wouldn't sweat it. But if you're not sure, if you don't want to see your account go down by 20 or 30 or 50 or 80% while we're still here, while we're still up near the top, I would consider possibly, me personally, de-risking or at least diversifying or protecting myself. Because while it's easy to sit here and say, well, I just want to get back to where I was at 475 and now we're at 450, so I'll just sell once we pop back up. Let's just be careful because we don't want to just continue seeing lower high after lower high after lower high. Now, when are we going to know? Well, we have an all-time high We're taking out the previous low right here, but it's still a wick. So if we close this week in the next couple of days lower than these previous two candles right here, we have to worry. And then the real area to look at is going to be 432. If we take out 432, if we cross the 821 to the downside on the weekly, if the hard sell signal plays out, if the downtrend with the red slope with the multiple red histograms, if all this plays out like it's saying it will, and the triple/quadruple bearish divergence on the weekly, if the market and the chart and the market makers and the whales, if they're telling us the truth clearly, which they are, all we have to do is just be able to speak the language, because they're laying it out for us right here. Over and over again, they're laying it out. If it plays out the way that they've laid it out, this shit could get nasty. So let's just remember that. Now it's going to be levels. There's going to be stair steps. There's going to be bounces. You know, we're going to see slinky theory in full effect. But we have to be aware of the risk. We have to assess our positions. We have to assess the risk. And we have to make realistic expectations. And if we can do all that, we're fine, because we'll never get emotional. Because if it does drop 20%, we'll say, oh, damn, look at that. It dropped 20%, which was one of our scenarios that we expected. Therefore, no surprises. Therefore, no snap bad decisions. So we're okay with it. Or 50%, or 13 years from now, you know, what is it, 2022 right now? Maybe it's 2035. We're sitting here right now, and, you know, we're all excited, and we're like, okay, been buying the dip for the last 13 years, and the market's getting ready to make new all-time highs. 2035, S&P finally getting ready to take out its 2021 all-time high. Let's go, baby. We're in it. Our positions are massively increased because we've been buying the dip for the last 13 years. We're not sweating it because we know that we're about to take out that new all-time high. And once we do, think about the size of our positions after that. But that's a real possible situation. That's a real scenario that we need to be considering, contemplating. You know, picture that. Close your eyes and just picture it. The year is 2035. The stock market has been in a 13-year bear market. It dropped 60% from its all-time highs and then double topped 8 years later, only to go to a new low. You have a little robot that walks around and does your bidding. But I mean, just whatever the scenario is going to be, just picture that. And then that way, if it happens, we're not surprised. So that's all. I just want people to be aware, because all I hear right now, and keep in mind, all the people that are telling you buy the dip, we were expecting this, markets don't always go up, it's just a healthy pullback. Sure, maybe we don't do 20% this year, maybe we only do 8%, but we're definitely going to go higher. This is a bull market. It's a buying opportunity. Valuations are at, you know, great prices. If you loved it at this price, or if you liked it at this price, you should love it at this price. All these people saying this stuff, they probably are making money off of just telling you what you want to hear. Most of these people, influencers on CNBC or on, you know, crypto channels or stock market channels or whatever, Twitter, whatever it is, 95% of these people are making their living off of telling you what you want to hear. Telling you that all you have to do is just keep buying and the price is going to keep going up. And it's just going to be easy money. Okay? So just remember that. Because once you realize that their motivation might be different than yours, because they're getting paid to just tell you what you want to hear, that might change the way you look at these markets. And that way you can at least adequately protect yourself, because you can determine risk reasonably. So that is very, very important. And I don't hear anybody talking about that. Nobody ever talks about how these people are all paid talking heads, how they're sponsored by crypto exchanges, or how they make commissions off of your crypto trading, or how they sell you a course, or how they get paid off your views, or whatever the situation is. Just be careful, because your goals, your future might be in the hand of somebody that you can't trust if you're listening to what these people are saying. Now, I'm not saying listen to me. Don't listen to me, because I'm always wrong. I'm wrong every day. I'm wrong right now. These markets only go up. It's probably going to go up to new all-time highs tomorrow. Bitcoin will be at 100K tomorrow, and I'm going to just look like an idiot. Or you can go back and look at all my videos for the last multiple years and see that I'm typically pretty right. So, but I mean, my motives are different. If I was, you know, worried about spending my time somewhere where I was going to make a bunch of money for it, I wouldn't be making YouTube videos. I wouldn't be trying to help people. So that's the difference between me and them. Now, maybe one day I'll sell out. Maybe one day I'll answer some of these emails and, you know, I'll take the sponsored deal from X Exchange or some trash bag crypto that I've never heard about. And, you know, I'll pocket the few $1,000s and put up an affiliate link. And then, you know what? Then you guys can call me a sellout. But I got a feeling it's probably not going to happen. If it hasn't happened yet, it's probably not going to happen. If I start putting up a bunch of affiliate links for trash bag exchanges and cryptos you've never heard of, if I start doing sponsored videos, wink, wink, maybe then find a new guy to listen to. But you know what? I got a feeling it's not going to happen. So, matter of fact, I can promise you it's not going to happen. So let's keep moving here. So IXIC, NASDAQ. So we can see now, and again, doesn't have to play out as we're looking at, but we see now this head and shoulders is starting to develop. So we talked about this left shoulder. We talked about the head. We came back up, put in a lower high. We see some no actual divergence on the daily, and we invalidated it on the weekly, I believe. But now here we are back down at the neckline. We're down at our target area. We lost the 200 moving average. We would expect a bounce around this area. And what would that bounce be? It's not just going to be everybody buying the dip and the price goes up. It's probably going to be a lot of the shorts closing. They're going to close their short position at support. And then we're going to see, you know, what amounts to a dead cat bounce or something like that, a bounce back up. Now, how high the bounce comes tells us basically how strong, tells us basically how strong the market is. You know, if we see a weak little bounce like this and then it rolls over, the market's weak and people aren't confident. If we see a strong bounce and come all the way back up to like a new high or the same high, you know, market's strong and maybe we just break back out. If we see just an average bounce, like a symmetrical little left shoulder bounce, you know, that's probably going to be, this is probably going to play out with the measure move to the downside. So we'll have to wait and see. I do expect a bounce here. You know, maybe not even this week. We might even break down from here. We might consolidate for a little bit. But I do expect some kind of bounce from this level because this is a key support. We have previously, this is our breakout point basically. From our previous high, previous high, previous high, and then support, support, and then I would expect for it to act as support again. Even though we're breaking down below the 200 exponential and simple, what happens? We break down below them. Everybody gets extremely bearish. The slope is still to the upside, at least on the 200 simple. Everybody gets bearish. They short. All of a sudden we get a pop. It crushes their positions. They get stopped out. Price moves to the upside. They reverse and go long. And then boom, price comes back to the downside. And then we get the break. Happens over and over and over again. Because they're always following the market. They're never getting positioned ahead of time. And that's why we position ourselves ahead of time. So in my opinion, over the next couple of days, we probably carve out a little bottom. We get a reaction rally and a retest. We got to see how high it comes up here. And that's going to tell us where this market's going. Now for me, you know, and keep in mind, tech has been getting wrecked. I mean, it is wreck city in the tech world. So this is the big guys finally getting wrecked right here. So, you know, everything else already wrecked. I mean, we can look at how many of these stocks are down. 40%, 50%, 75%, you know, bankrupt. This is the big boys holding this price up here. So if the big boys break down, people that are like, oh, it already is, my favorite random stock that makes no money is already down 50%, so it can't go down any lower. Well, okay, if Apple goes down 20%, if Microsoft goes down 20%, if Amazon drops another 20%, you know, I bet that X shit stock probably could get cut in half one more time. Maybe one more time and then once again after that. Possibly even a third time. But you'd be surprised how many times some random stock that makes no money can get cut in half. Over and over again. What's that old song? So we got to be real careful in these markets here. You know, and remember how long everybody's been saying cash is trash. Old Ray Dalio. You're losing 6% of your buying power every single year. Inflation is at 7%. That's not even the real numbers. Inflation's 10%. It's 11%. It's 12%. You got to be stupid not to see it. Okay, pick out a stock anywhere on the whole market. Pick a stock that's not down more than 6%, more than 10%, more than 12%. You will be hard pressed. You could probably count the amount of stocks or cryptos that are not down over 6, 10, 12% on one hand. So all the people that were saying cash is trash, well, look, they were proven wrong now. And not in a year. I mean, most of these, think about that. They were telling you, invest all your money, spend all your cash as fast as you can, because it's going to get devalued by 6% in a year by inflation. And now we're seeing 6% moves in a day to the downside. So you just lost a year worth of depreciation on your money, on your currency, on your dollar bills, y'all, in a single day. So maybe reevaluate those people and their intelligence level. That's all I'm saying. I'm not going to hate on Ray Dalio. I mean, he's definitely a smart dude, but old cash is trash. Well, he sure looks like a, let's just say old Ray may be wrong now. So the Ruddy, this is the real one that I'm paying attention to, the Russell. This is the canary in the coal mine. This is the red flag waving right now. Okay, this is the smoking gun for the stock market. The Russell is often the underperformer. It's the weakest. It's all the small caps that are publicly traded, you know, top 2,000, but doesn't have the big boys in it. Doesn't have the big names. So if we know, obviously, the Dow Jones got the big names, we've got a bunch of like the tech stocks in the S&P, but also in the NASDAQ. And then the S&P is like the top 500 companies ahead of the Russell. The Russell is like the next 2,000. So it's giving us more of like a broad sense of the market, but without like the top notch ones. And we know that this market breadth has been tightening, you know, basically saying that less and less stocks have been performing well. More and more stocks are performing poorly, and only the outperformance or the strength of those smaller stocks with a heavier weight inside of the index is what's holding up the price action, giving us a deceptively broad view of the market that it's much stronger than it actually is. So the market's basically lying to us, and all we have to do is just lift up the covers and we can see what's really going on down there. So the Russell, though, the Russell is telling us the truth. So what we see here with the Russell is this thing was trading sideways from January of 2021. So this has literally been going sideways for an entire year. And remember, we got our distribution, our Wyckoff distribution throw over right here, the failed breakout from the channel. And that was our big red flag. I said, I don't trust it. I don't believe it. I think we're going to get rejected. I think we're going to break back down. And then boom, we did. We come back down. We retest the bottom of the range. Well, now we did something we have not done yet. We broke down from that channel. We already hit halfway down the measure move. I mean, not quite halfway, but almost halfway down. We already flipped over. Let me turn off the actual price just so we can see a little clearer here. We flipped over the 200 exponential red. We flipped over the 200 simple pink or red, whatever you want to call it. So now we're officially in a bear market on the Russell for the first time. We flipped into a bull market back here in October of 2020. We entered this range in January of 2021. We broke down from this range in January of 2022. So we know now, after breaking down from this level, we have officially entered a bear market on the Russell 2000. So, you know, as far as Wall Street is concerned, technically it would go from the all-time high to where we're at right now. The Russell's only down 15.8%. So Wall Street determines it by traditional TA, whatever, is 20% move. So usually price will be down 20% far before it goes into a bear market. In this case, the Russell has performed so poorly and gone sideways for so long that actually I'm ahead of the game with my determining the bear market. So 4% from now, everybody else will say Russell's in a bear market. For once, our way, our method, which is more accurate, less responsive, but more reliable. But right now, we're ahead of the game on this, which obviously we were expecting this. It's not like it's some big surprise. But this right here, when this officially enters a bear market, when everybody starts saying, oh, the Russell is down 20%, it's officially in a bear market, this is different, the Fed needs to do something, you know, the stock market's already down 20% and it's only been a couple days, they haven't even raised rates yet, and already the Russell's down 20%. I'm going to tell you right now, the Fed, they haven't even raised rates yet, and the Russell's down 20%. Now, granted, the stock market is looking ahead. It's pricing these things in, sure. But I'm going to tell you what's not priced in. The fact that if the Fed all of a sudden says, okay, we're not going to tighten anymore, inflation is just going to keep shooting up. So the Fed literally cannot back down right now because of the inflation. And if you didn't check out that previous video, I did that 2-hour excerpt, and I highly recommend you watch it. Because it basically breaks down everything and talks about why this time is different, why this time we have inflation. So the Fed actually will raise rates. We're not going to see the same thing that we've seen for the last 40 years while we're in a bond bull market, while we had no inflation. So anyway, we know the first target for the Russell, the measure move, the 236 of that move up is 1971. So I fully expect this under 2000. Now, granted, we're already almost there, but realistically, probably like about 1915 or something like that is the measure move. And again, that's just from the bottom of the trough right here on the CVD dump to the peak up here, the absolute top on the Russell. And then this is just confirming essentially that our Fibonacci is validated once we hit the 236 at 1967, at which point in time we would expect some kind of pushback to the upside and then continuation. Now, remember that once this breaks down, finds some support, pushes back up, the 200 exponential and simple will be rolling over. That's going to be our reversion to the mean play. So maybe we'll take a little scalpy scalp back to the upside. But again, at this point in time, this was buy the dip mode this whole time, and now this is sell the rip mode. So here, every time we dip back down to support, we want to buy, we want to buy, we want to buy, we want to buy, 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 buy. And now it's like, uh-oh, wait a minute, things have changed. So then we bounce up here. Now we want to sell, bounce down here. Now we want to sell, bounce down here. Now we want to sell, whether it's options, whether it's, getting rid of some of our remaining positions, whether it's just a regular short play, whatever it is, the market sentiment has changed. Now, I don't traditionally like to short stock market in general, just because the stock market always goes up. But this time legitimately could be different. So, there's two ways you can short the stock market. You can legitimately borrow shares and short a stock, sell a stock you don't have and expect to buy it cheaper. Or you can just not participate. You can sell the shares you do have and then just sit on the sidelines. So by not being long, you're technically short. So, you don't have to make money on the way down to just increase your buying power if you want to buy back into something on the way down. So, again, this is not financial advice, obviously, but, you don't have to just be betting against the stock market to just say, I'm not going to bet on the stock market. Therefore, by default, I'm technically betting against it. Otherwise, you would just be buying it. So anyway, the Russell, the canary in the coal mine, when this goes down another couple percent, we're going to start hearing, and this is what's going to happen. I'm going to tell you exactly what's going to happen, okay? We're going to come down here. We're going to hit this 236. We're going to hit 20% down from the top, okay? Everybody is going to be saying the Russell's in a bear market. Oh, look, it's exactly at 20% too. Look, the 236 exactly at 20%. So everybody's going to say the Russell's in a bear market. Oh my God, this is it. It's a bear market. The Fed needs to do something. They need to step in. It's a bear market. Sell, sell, sell. Get out. And then what's going to happen? Everybody's going to be saying the same thing we've been saying. And then all of a sudden the price is going to bounce. It's going to bounce straight back up. And then people are going to be saying, oh, we got to buy the dip. We got to buy the dip. This is it. And then it's going to come up here, get rejected, and then continue to the up. Happens every time. All these people they read the news. They tell you what happened afterwards as if you couldn't just do it on your own. And then afterwards they say, we did say there was a possibility that we could see a true correction. We did say that the markets don't always go up. We did say that we were seeing some weakness. We did say that valuations were a little extended. We did say that we expected a pullback. Acting like they're always right. But you're like, wait a minute. I saw you yesterday. You were saying buy the dip here and buy the dip here and buy the dip here. 13 years later, when we're still down, they're going to be like, we did say there was a possibility of a pullback. So just keep all this in mind and just pay attention to who's full of shit. So XLE obviously still burst into the upside. The strength in oil, nat gas, coal, obviously this stuff is propelling this higher. I do expect this to stay strong until we see that potential move play out in oil. But again, I'm not looking to buy at these levels. But obviously, what's XLE is something like 50%. What is it? Chevron and Exxon. So, if you're that's how I typically will play a lot of these plays without having to go through and do stock picking or whatever. Or if I was building a portfolio, let's say, especially in a bear market, I would probably look to a couple of the indexes or a couple of the funds that give you a little diversity, and then I would pick a couple of my favorites as well. That way I don't have to pick perfect on one or two. I can have a little broad exposure to a sector, and then I can pick my favorite ones inside of that to go overweight within that sector. XLI, so industrial, again, we talked about this double top. It looks like it's playing out. We're crossing 821 to downside. We're starting to hit the mid-level here. We're starting to hit our key moving averages. We have the 200 exponential at 101. We have the bottom of the range down here at 99. Again, same thing. We've been just trading in the sideways pattern. At this point in time, you know, we technically entered into this range in like April, and it's literally gone sideways. Just think about how much money has flowed into the market in the last year. And we're back at those same prices again. Think about how many new people bought into the market, or how much new money was put into these markets in the last year. And most of these things are at those same levels. That's how people get wrecked. Once there's no more momentum, there's no more money coming in, or at least not net more money coming in than leaving. That's when the trouble happens. And that's how they get all the plebs, all the new people, the young people, the random demographics that were not involved in the markets. Same thing happens with crypto, happens with stocks, all of it. XLB, material sector. Again, we see that topping pattern. We're right down at the bottom of the triangle. We're at the breakout in yellow. We're at the support here in green. If this area holds, we probably just come straight back up to 90. If it breaks down, we probably see these 200 exponential and simple moving averages and the blue line support at 84. Until we break above 90 or below 84, we're essentially just range bound right here. But we do see, once again, that bearish divergence playing out perfectly. XLF financial breaking down here. Remember how we talked about, we expected this to come back up at least to the 1.618, and that was our target. We fell just short at the 1.5, and then when we got up here, I told you about how everybody was so bullish on banks. Banks are going to crush it. They're going to crush earnings. They're going to destroy. Banks can't lose. They can't lose. Banks have everything going for them. They're making money on the markets. If the rates go up, they make money. If it hails, they make money. If it snows, they make money. If there's a hurricane, they make money. If the sun falls out of the sky, they make money. Banks make money no matter what. And then look, 3 days later, banks are wrecked. And it's like, well, they underperformed. Their costs were up. They were paying banker buddies a little more money. Come on. This is just ridiculous. We literally talked about how banks were about to get wrecked, because where are the banks making their money at? They're not making their money on interest rates. They're making their money borrowing from people and then loaning you that money, or borrowing the money from you basically via deposits. And then they're taking that money and speculating. And where are they speculating at? In the markets. So even though the bank sector is doing well, if rates go up, they're doing poorly because they invested in a bunch of horrible stocks while they were extremely overvalued. Same as these companies doing buybacks. All these companies that are doing buybacks, stock buybacks at record levels, they're buying back their stocks at all-time highs. So they're doing great for their shareholders because they're decreasing like the amount of shares that are on the market, therefore driving up the share price. But they're buying these stocks at record levels. They're buying their own stocks back at record levels. That is literally the stupidest thing ever. It's literally the worst possible thing you could do as a business for your company. You're like, oh yeah, I'm going to just buy back a bunch of stock. That's great for the shareholders. But absolutely horrible for your company. Absolutely horrible. It blows my mind. If you were smart, you would do, like, not to be a dick or whatever, but look at, what was it? AMC. Look at like Avis. Or no, it wasn't Avis. Who was it? Hertz. Like, their stock shoots up to the moon all of a sudden. What are they doing? They're issuing stocks. They're selling new stock faster than they can. They want to sell. They're creating new stock and selling it as fast as they can because they know the valuations are bullshit. That's what you're supposed to do. That's smart. It screws over the people that buy them for sure. It's definitely a dick move. And, that's why essentially like the SEC is like, no, Hertz, you were bankrupt yesterday. And now you're at, new all-time highs. You cannot sell a shitload of stock. Like, no, you can't do that. But, AMC, same way, whatever. All these other companies buying back their stocks at record levels, they're literally doing the opposite. It's literally the opposite. So if one of them is a really smart move, selling stocks at record valuations, because your company is overvalued, your stock price is overvalued, what is buying back stocks then? It's the stupidest thing you could possibly do. And who's been doing that? The list is probably shorter of who hasn't been doing it. So be real careful here. Let's be careful, but let's keep moving. So financial sector, looks wrecked right now. Obviously quite a bit of support right where we're at. That was our breakout level basically. Right here at like 38, we got the 200 moving averages, but the key level to watch is 35 bucks. If we break down from these levels and we come down to like that 35, that's where we're really, really paying attention. We also have some kind of like ascending support line right here. Arguably some kind of like channel, some kind of wedgie, something like that going on. Something like this, whatever. There's not really a clear way to draw the top, nor do we care. But, you know, basically this support line, we break down from that. We have both 200 moving averages. And then obviously our green line support we're paying attention to is like 35 bucks. But let's keep going. XLY. So consumer discretionary. So what was this? This is what we were talking about. As soon as we start seeing, now who buys consumer discretionary? You know, this is goods that people don't need, but they like. You know, they're a little more expensive. You know, these are like the treat yourself goods. Okay, so for regular people, this is when you treat yourself. For like rich people, you know, this is the super treat yourself. But when times get tough, the poor people can't afford to buy consumer discretionary goods, and the rich people are too smart to buy consumer discretionary goods. So I expect this to underperform. I expect this to do horribly, and it's already underperforming in comparison. We're almost down to 200 exponential and simple. Obviously, key area to watch is 180. If we start breaking down from these levels, if we lose 180, that's the danger zone. Now, keep in mind, when I give you these targets, though, I do not expect this all to just melt straight down in like one big red candle. I do expect the slinky theory, which if you're not familiar with the slinky theory, it's basically just, you know, a slinky going downstairs. You come from the high, it hits the next stair, the tail whips back up, but it doesn't come back up to the stair before it. It just whips back up and then it goes to the stair below. And then once it hits that stair, it whips back up, you know, lower high, and then to the stair below. So we just keep doing that. It's like stair step down. That's slinky theory. And that's official. That's published in lots and lots of textbooks. You know, I mean, it goes back to, I think, somewhere like the 1800s, I believe. Or actually, no, wait. Slinky theory? Oh, no. I think I made that up like 6 months ago, actually. Yeah, that actually, slinky theory, that's not official at all. I did just make that up about 6 months ago. So sorry, I mixed that up with actual real technical analysis. But it does work. XLP, so consumer staples. Now, this is the opposite. This is the stuff people need. Now, as the prices go up, as inflation keeps, you know, going on or whatever, you can't just not buy these things. So if the price go up, you might buy a little less of them, or you might cut back on other stuff, but you would be expected to continue purchasing these goods. So while I do expect some weakness in this, look how much stronger this is than those other charts we've been looking at. Now, it is still holding on to this key support level off the breakout. I do expect it to sell off, but this is where money has to go somewhere. It has to go somewhere. Most of these, like, you know, hedge funds or ETFs or family offices or whatever, they have to put the money somewhere. They're not allowed to just, you know, some of them are allowed to keep cash balances, but most of them can't just keep a bunch of cash just sitting in the account waiting to buy the dip or whatever. So if money comes out of something, it has to go somewhere else. So when the money comes out of a lot of these stocks and they have to rebalance or move it into different stocks or ETFs or whatever, XLP is one of the places. Consumer staples is one of the places, you know, where I would expect it to be. So I do expect this to hold on even as everything else sells off. If you move out of something that's about to sell off 20% into something that sells off only 5%, you basically, like, you know, have saved yourself that 15% downside. And then you can redeploy and buy more of the one, you know, that went down more. So essentially that's how they're like kind of arbing like the different moves in these. So healthcare actually is showing a little more weakness than I was expecting. I'm not going to lie. Maybe this has to do with the, Pandora's box being closed, so to speak, or potentially seeing the end of the current situation, possibly, maybe, you know, depending on where you live. If you live where I live, I haven't even seen a mask in like 6 months. I know if you live in like a woke city or state or country, you know, it's still like full lockdowns or whatever, like hazmat suits, and they're like spraying you down with like, bleach or whatever, maybe injecting it in your veins, depending who the president is. I don't know. Please don't do that. That's just a joke. Probably just got banned. Probably just got taken off YouTube. Can you guys still hear me? So anyway, XLV showing a little more weakness than I expected. A lot of these things were super overpriced to begin with because we had a bunch of things like Pfizer, Moderna, a bunch of these like, you know, J&J popping off like crazy. So as they return back to like normal valuations, we're probably going to see some pressure on these, but we'll have to pay attention. We see the 200 exponential and simple here. We see the, ascending support from the triangle breakout. We essentially hit our target, hit our box, and now we're selling off. So what do? After we hit a nice measure move, after we hit a nice trade, after the market does what we expect it to do, we sit back, we let the market print again, we let the, whales tell us what they're going to do again. They leave us the breadcrumbs. We pick them up. You know, we kind of sniff the trail. We follow it. And then we say, oh, okay, I see what you're about to do. You're about to pull a BNE on this window over here. You're about to drop. You're about to pop, whatever. And then we position ourselves so that we can benefit. You know what I mean? As soon as they break the window, we run inside and grab some of the stuff, you know. I mean, maybe that might be a bad analogy considering what's going on right now around the world. But you know what I mean. You know what I mean. You know. Anyway. XLU, so utilities, another one of those ones that's much less volatile. So while we don't see it selling off nearly as bad, it is coming off the highs a little bit. But this is another one of those safety plays people run to. When they have to put their money somewhere, they move it over to utilities. Even if utilities doesn't go up, it doesn't go down as much. And then they can re-diversify back into like said tech stocks. So they're down like, oh, I lost 4% in the utility play that I moved into. Meanwhile, like, you know, the tech stock that I wanted exposure in or had exposure in is down, you know, 82%. So I think I'll just snatch up 4 times as much of that. XLK. So, all right. So tech has broken down from that key support that we were watching in green. So we know our measure move is going to take us down to 200 exponential and simple right here. So we fully expect XLK at like that 154 range. If we break down from that, now again, we're at support right here. If we do break down from that, I would expect basically a bounce back up, a retest of 165. But again, we're no longer buying the dip. We're now selling the rip. And then we see the continuation eventually down to like 143. Let's see how that plays out. But we did see, obviously, bearish divergence playing out on our indicator oscillators. If you're not using the indicator oscillators, I do provide many of them, most of them, for free down in the description of the video. You can find them. And then, obviously, the TJD Master and the new iteration of the Jewel Thief are both offered exclusively to the group members. You can get the old versions of them and moving average indicators as well down below. But the new versions, the best versions, you're the best. Those are available only to the group members for a contribution. And I do appreciate the group members and their one-time contributions. XLC, communication sector. This one has been the weakest for the longest. It's been unable to reclaim the yellow resistance line. Well, what support as resistance? You know, we came back up, we got rejected, we rolled over. It is officially in a bear market, 200 exponential and simple rolling over. I fully expect a new low on this and the 236 target of $71.57. This looks like trash, and it is already in a bear market confirmed. So we know from the bottom right here to the top right here, the 236 is that 71 level. And we know that obviously once we roll over, we expect further downside. This is just the beginning because this went into a bull market confirmed at $50. And now it's going into a bear market confirmed at $75. So where does it go down to? Well, we'll find out. XLRE, so real estate. Obviously, we're seeing that, now, interest rates are at all-time highs on mortgages. So now that's going to put pressure on the housing markets. We're seeing that housing starts are down. We're seeing that, across the board, like real estate numbers are just not looking great. There's still a lack of supply in many areas, in many cases. So the prices are holding for now. But, again, we see obviously the way the real estate market works, it lags. It lags and lags and lags. And then eventually, it bottoms out once it's really felt the pain way after everything else. But as rates rise, as the actual Fed funds rate, as mortgage rates rise, the value of the homes decreases substantially because, if you got a loan at 3% versus somebody else is going to get a loan at, just as an example, 10%, the value, the price that they're willing to pay for that home is substantially less because by the time you take into account the compounded interest over 10, 20, 30 years, it's exponentially more. Exponentially more. So XLRE. Let's do XTN next. Transportation at 200 exponential and simple. Holding support temporarily for now. We'll have to see what happens here. Looks like it's getting ready to break down from this level. We obviously got our breakout and essentially the move played out, came back up, failed to get back above it again, put in a lower high, and now we're rolling over. We've talked about transportation sector typically topping out around like January based on like those cyclical moves. I mean, I've been through this 100 times. I'm not going to talk about it again. You guys already know. So Hale is down here at our target, hit our target literally perfectly, at support right at that $50 range. Putting in a new low, breaking down from that key support in green right here. So now we know that we have basically come down to a key Fibonacci level. I do expect after that, that's a 236. I would expect a bounce back up, a reversion to the mean, clearly in a bear market. And then our next target to downside will be the 382. Very likely, though, we do bounce up here and underperform somewhere back around like the $52 to $54 level. And then we see this roll over and Slinky theory in full effect. Hail, terrible. And this gives us like sort of a targeted version of our transportation sector. So that one has a bunch of like, rental cars and a little taste of like Tesla. And I think it has like Plug Power. And I'll have to check again. It's been a while since I looked at some of these. So then jets, this is just, a bunch of airplane companies, obviously transportation sector as well, looks like trash. Broke down from our ascending support, entered into a bear market, reversion to the mean, retest, rejection, coming back down. I fully expect this to come down lower. So we already topped out. We bottomed at the 236. We came down to the 382. I fully expect us at the 0.5 soon, and that is our measure move breakdown. So the 0.5 is $18, at which point in time we can reevaluate. But you guys know how I feel about these airplanes. I mean, they topped out in like 2014, and like I can't picture a world where these companies are ever better than they were in 2014. Like, I think this industry has peaked. Unless they like go into like VTOL drones or something, like vertical takeoff and landing drones that like people can fly in or they can transport goods. I just don't really see it. So until something legitimately changes, till tech changes or whatever, I just don't see it. When I hear people talking about, buy the dip on the airlines, like, are you kidding me? They're probably gonna be begging for a bailout in like 6 months. Like, Boeing's at key levels. Like, this is a good buy on Boeing. It's down off its highs. It's down off its highs because its job is to make airplanes and it can't do it. It can't make airplanes, and that's its one job. You're like, how's Boeing look? It's been around for a long time. Not good. It can't make airplanes, and that's its only job. So do I want to buy Boeing at these levels? No. Would I buy Boeing at lower levels? Probably not. They suck. UPS. So again, this is what we were talking about, that triple top. This is our resistance. We sell resistance. We buy support until it breaks. And it hasn't broken yet. We didn't expect it to break. And now here we are coming back down to the bottom. We're basically at the heartline of the channel. And UPS is a strong one. We see FedEx finally hit our move to the upside. It looks like it's gotten rejection off 200 simple. This was our breakdown, bear market, reversion to the mean. And now it looks like we're going to roll back down here. I fully expect FedEx to come back down to 237. And then I do expect it to just continue melting down. I would not be surprised to see this under $200 in the very near future. And then also FedEx is trash. It is actually trash. Oh, did anybody see all the Amazon packages that got like robbed in California? And like there was like 1 million packages like robbed and opened off these trains. I don't know how nobody saw it. There's no cameras or anything. Like there's literally like debris everywhere from all these packages that got stolen. There was so much garbage, like packaging from all this stolen merchandise on the train tracks. It derailed the train. Like, is this even real life? Is this Mad Max? Nobody saw 140 million packages like opened and strewn all over the railroad tracks. The guy driving the train wasn't like, there's an awful lot of like debris over here. Maybe we should slow down the train or call somebody to clear off these tracks. I think the world has gone mental. Actually, you know what? I'd go as far as to say I know the world has gone mental. I don't even think it anymore. I'm sure of it. I've never been so sure of anything in my life. Pave looks like trash. Looks like the infrastructure play. Probably not playing out. Go figure. Atari down here, $26. We see bearish divergence, meltdown. And that is just a retest of 1.618, 200 exponential and simple. So that is it for these. Let's jump over in the chat and say what's up. What's up? I'm going to grab a drink really quick. Give me like 2 seconds and I will fully engage with you, peeps. All right. So XX Angel says, hey, buddy, I'm the only viewer online. Second join. What's going on, Angel? Good to see you. Bot in the chat. What's up, body bot? Oh, that's right. I deleted you. Sorry. Could have been one of my favorite bots. I didn't even look at the name, but Neuroman Van Hooting. Man, can you take a look at title on YouTube when Bitcoin hit 100? CNBC's 2013 coverage. Can you tell us why the S&P 500 and NASDAQ big red, but gold and Bitcoin big green? Okay, so you want me to take a look at a YouTube video called When Bitcoin Hit $100 from 2013 and tell you why S&P 500 and NASDAQ are red, but gold and Bitcoin were green. I could maybe like look at it and do like a snippet, but I'm not gonna like go look at it like live stream right now. But I can comment on it either in next stream or do like a static video or something on it. No, actually, I'm just about to get to your question, JRE. Oh, it's Rogan. Is that Joe Rogan in the chat? J Rogan. What's up, dude? Does anyone know why my Binance account could have received a deposit that I didn't make? Probably they messed up, or possibly, I mean, I don't know. Does somebody else have your wallet address? I mean, I've heard of them making mistakes in the past. To tell you the truth, though, I wouldn't just like go crazy. I don't know how much money it is or anything, but chances are they're probably going to figure it out and roll it back. I mean, it's the same as like a bank. If you've ever accidentally had like too much money in your bank account, and then they're like, oh, hey, that $1 million that wasn't yours, like, we're going to need that back, plus interest. Last time you traded on it was October? Yeah, I mean, I don't know, man. It could be anything. But, I mean, the truth is, wait long enough if it's still there. I mean, I don't know what the 191 bucks. Yeah, I don't know what, like, the time is on that. But, I mean, if it sits there long enough, it's technically yours, I would imagine. So, I mean, you could just go all in on SHIB. That would probably be a good idea. I'm just kidding. All right, so let's look at DXY and the tech stocks. That's fine, man, but can you explain? Yeah, I'll take a look at it, and I will hit you with a little explanation or whatever on it. It was from 2013, and it was when Bitcoin hit 100 bucks. Yeah, I'll check it out, man. I mean, what was going on in 2013? We had a little peak in the markets around that time. And let's see, gold topped out in 2011, though. So that must have been like a lower high bounce at that time. Probably some kind of inflation fears coming off of the dot-com bubble. No, 2013. Oh, after the real estate bubble? Man, I honestly can't even just think off the top of my head, but I'll take a look at it. I'm sure there's a rational, somewhat explanation. I can't think what like 2013 would have been necessarily off the top of my head. But I know there is a peak around that time. So DXY, obviously, been strong, put into a bull market. We had that pullback as expected, came back up, so far lower high, breaking back down below the 821. This just looks like a reset to me. This is healthy. I like to see this. It gives an opportunity for, foreign exchange traders or, people with dollar denominated debt to essentially settle up that debt. We don't want to just see the dollar start going parabolic. I'm still very, very bullish on the dollar long term, but short term, I actually would like to see this go sideways to kind of pull back a little bit. But to tell you the truth, if we see a lot of weakness in stock market and crypto, I fully expect, depending on what yields do, I fully expect, like currency, whether it's the dollar or X currency, and then also gold and silver to do well, which we've obviously seen a little bit of move in gold and silver. If bonds aren't safe, if stocks aren't safe, if crypto's not safe, money's got to go somewhere. So where's it going to go? Into currency units and, gold and silver. And gold and silver have been underperforming. We saw a little pop out of gold, silver, platinum, but we haven't broken those key levels yet. So I don't want to get overly excited right now as we like prepare to basically put in another lower high and just disappoint. But they're starting to look okay. So DXY, would not be surprised to see this back down around like 94 or something like that. I mean, it would have to go so low for me to be worried about this being like actual danger play though. If it gets below like 93.33, I'll start like getting worried. But other than that, it just looks like a retest at this point in time. So looks good on the daily. I mean, for what we want to see. So Tesla, hanging on to this level for right now, but we do have a high and then a lower high. We have a low right here, so we don't want to see it tick out this low because that basically confirms a downtrend. I do expect it to come back down to like that 888 level. We have the 200 exponential and simple around here. Decent amount of support around that level, around 8 or the high 8s to low 9s. If it breaks down from there, then we're talking like mid 7s. Yeah, and I mean, there's now all of a sudden we're hearing a lot of news about Tesla getting sued and people getting killed and the self-driving is BS and sure. So Lyft just getting absolutely wrecked. Revisiting the lows right here, completely melting down. Definitely in a bear market, 100%. I fully expect Lyft to just completely melt down here. Completely melt down. And I imagine it's probably, it's trading pretty technically. So this is our 382. So our next target to downside is a 0.5. Again, we could see a bounce. I mean, a lot of these things have been getting wrecked. So it's not like, oh, now's the time to short it by any means. But, do I want to just buy the dip right now while it's putting in a brand new cycle low? No, obviously not. Bear market. We already got the reversion to the mean trade. Now we just let them melt down. We let the ice cube melt. And then when the time is right, we pull out our little straw and we slurp up that water. And then eventually it gets cold again. It freezes. We can pop it in our drink and sip that bad boy in Maui or, whatever tropical island you so choose. Uber, again, perfectly, beautifully, technically. We took the trade on Uber. What's up with our dollar sign being all crooked? Who's in here messing with these charts? Obviously had a very nice trade on the Uber, 25% play off the 382. And now here we are right back down, damn near the entry at the heart line. This thing is it's just melting down in the descending channel, completely getting wrecked. Next target, the 0.5. We already hit the 382. Next target is a 0.5. So, one should reason that if Uber just keeps doing what it's doing, that, completely just melting down but staying inside this channel, that realistically, we could probably assume it's going to take a while, but eventually, somewhere around mid-April, we're probably going to end up down here at like that 0.5 range because it just keeps bouncing, maybe push back up, comes back down, breaks down here, and then, oh, it's April and we're at our target. So we shall see. Hopefully Uber Eats can keep them in business for now, but obviously they don't make any money. So another beautiful trade. This was a nice one to start off the year with. Over 20% move. Popped up. Reversion to the mean. This thing has just been getting wrecked forever. Discovery. So again, once I see this happen, I just want to sit back and let it play out. I fully expect this to break back down and lose the 200 exponential and simple. I think this will be a failed retest. We also see the sell by sell, divergence signal, basically at resistance. So again, I fully expect this to just melt back down. This was a scalp. We grabbed it by the hair, pulled out our blade, performed the ritual sacrifice, put the scalp into our, little fanny pack, and now it's on to the next, okay? We're not getting married to these things. We're not trying to pick the bottom on these things. We're not hodling, okay? If you want to build a position in something after a scalp like this or whatever, let's say we take a position in something and we buy 10 shares of it, and then it goes up 25%. So now our 10 shares are worth 25% more. We can pull back out our initial investment. We can keep a portion in profit and keep a portion in the actual stock. So if we're up 25%, maybe we could keep one share and then we can sell the other 9, keep the profits on, the actual move itself. And now we have a small position remaining, but, we've got our money back out of the market. That's a good way to build a position in something without just giving back your gains should it just sell back off. Because at this point in time, we have our initial investment back. We have the profits off of the initial investment. And then we have a small percentage or portion or, couple shares left over that's the market's money anyway. So it's like, oh yeah, so we took this from the market. Now some loser gave us free stock, so we can just put that away. We can just hodl that. That's how you hodl. You don't hodl with your own money. You hodl with the loser's money, okay? And I'm not trying to be mean to the people that are losing, but you know what? We're playing a game. We're the winners. They're the losers. And that's how it ought to be. And that's how it's going to continue to be. Okay? Because the hodlers are losers. It's the truth. Unless something's just going straight to the moon. And then they just hodl it back down, and then they eventually are a loser. Eventually. Same thing with Vicon. Got a nice little pop-up right here. About 25% of our 26% move. So is this going to underperform and it's done? It really probably is, honestly. I don't get greedy with these things. I would rather, say it does the same thing that Discovery did and it pops up another 5, 6, 7%. I would rather miss out on that or just keep that little bit of profit, in that last portion of the trade or whatever, than just have it miss our target by, 1%, and then we don't take profits, and then it's already down another 8%. So it's like, oh, great. I mean, we're still up, obviously, if we didn't take profits on this, but not me. I love to lock in gains. There's nothing better to me than locking in gains. Some people cannot stand when they sell something, make money, and then it keeps running on them. I literally don't even care. I don't care if I never look at you again. Once I have that money in my account, once I have those gains, I don't care if I never see you again. I would literally never trade you again if I don't want to. If you never come back down to my target, don't care. Don't care. Completely divorced from what it is. Okay? And that's the beauty of it. You got to just completely separate yourself. You could believe in the company. You could believe in, the founder, their mission statement. They could have good hearts. You could love everything about them, their products, but it does not mean that you have to get married to the stock. So Pinterest, completely just melting down, just getting destroyed. Obviously this was what we talked about here, just getting absolutely wrecked. We took a stab at this thing, didn't work. That's fine. Now we have this gap fill. So we have a potential gap fill down here. God, this chart is nasty. Ooh, Pinterest, you nasty. Can't even tell what you was doing. Try to clear some of this up here. Okay, that's a little better. So we have this gap fill down here, way back down at like $24. Remember? Not all gaps get filled. This is a runaway gap. We're never going back down to 12. Oh my God, we're at $20. Sorry, Pinterest. So yeah, trading very technically. Obviously crushed it quite a few times on this. Very clearly in a bear market and accelerating to the downside. Broken down from this key support. Damn near at the 0.5. Again, I would expect some kind of bounce off the 0.5, but the 618 just so happens to be the gap fill, so I would say that's a pretty reliable target on Pinterest. At which point in time, maybe we'll take a stab at it again. I don't know. We'll see. Complete meltdown. Same with Snap. Took a stab at the old snapper. You know what? Put your fingers in the snapper too many times, you're going to get bit. All right? It happens. I'm not mad about it. Okay? Same thing. We got a gap back down here at $29. All right? So, just going to wait it out. Patiently waiting for the old snapper. What's that called where they jam their hand in the, the hole in the water and then the catfish bites it? We're just going to go noodling here. Okay? We just stick our hand in there. And then when the catfish bites, pull it out. We got us the old noodle or whatever. I don't even know where the name comes from, but it's like the most redneck thing I've ever seen in my life, but sure is entertaining. Now, me personally, am I a noodler? It's just not my style. It's not my style. I mean, would I ever try it? No. I would go on a boat and watch other people do it, but I'm probably not. I'm not trying to go elbow deep in a catfish. Actually, you know what? There's not a lot of things I would go elbow deep in. Let's be real here. But anyway, Snapchat. Am I willing to go elbow deep in Snapchat at $29? Maybe. Maybe. I will possibly give it a shot. I might snap a little bit up at $28, $29. We'll see. But obviously this did not work out. It happens. Risk reward. We flipped a coin. We lost. It gets our little percentage. But, we make it back on the countless other trades we succeed on. And that's it. It's risk reward. completely divorced from the market. Can't all be winners. But yeah, that's our target, 29 bucks. We are at the 382 right now, though. Do we get a bounce right here? We probably do, but I mean, to tell you the truth, though, this is just an open air pocket, just waiting to just get wrecked right there. So, I mean, if we break down from this level, it probably just gaps straight down. Maybe it fills the gap. I think probably, if I had to guess what's going to happen right here, when this level breaks at 35, I think it will gap straight down to 29, and then it will be a big green candle back up to 35. So I think we'll gap back down, and then we'll fill the gap to the upside, because it will do the exact opposite of what everyone else is thinking. It will like pre-market gap down, and then it will fill the gap, and then it will probably just continue to melt down. So that's my prediction. I'll snippet this when it comes true, probably tomorrow. Peloton, is this even still a thing? Is it still in business? Are we still doing Peloton? Do they have these anymore? Yeah, I mean, this is... I talk so much trash about Peloton at $150, and it has literally just completely melted down to $31. So, you know what? I think Peloton's a pretty good company, actually. You know what? I'm going to take the other side of this trade. Because everybody else was super bullish at Peloton at 150. I'm bullish on it at 30. I was bearish at 150, though. I thought it was total trash. And it still probably is total trash. But you know what? I'm going to be the contrarian here. I like Peloton. I'm not going to buy any. I don't want to own an actual Peloton, nor will I invest in this trash bag company or its stock. But you know what? Taking the other side of this. Verbally, not like with actual money, though, because Peloton is trash for sure. And now, on top of it being already trash and garbage and the stock going to zero, they're going to have to compete with all the people who bought Pelotons that don't want them anymore. So, like, you're going to go on, like, Craigslist, and there's going to be, like, 300 Pelotons within a 9-mile radius of you for, like, a quarter the price of a new Peloton. They're, like, $2,000 when they came out. You buy them on Craigslist for $80. It's like the most expensive coat hanger in existence. Never been used. Peloton, $300. Pick it up. Bring your truck. I ain't helping you load this thing. Actually, if you own a Peloton, you probably don't talk like that. You probably talk like this. I'm not helping you load that Peloton. Come and remove it yourself. Airbnb. Yeah, it doesn't look great. Broke back down. I mean, bear market, breaking down from key support. I mean, it looks like it's going to 141. But most of these things are just getting wrecked, and I expect them to just continue getting wrecked. Let's put it this way. I'm not looking to buy the dip on these things right now. I fully expect Zillow to get down to our target. Am I going to take this trade on Zillow now? I mean, we were waiting for this target to get hit. It didn't get hit at 49. And now the entire market is completely melting down. So am I going to take it now? Maybe not. We'll have to see. I'm not just going to put a standing order in at $49 and, you know, just hope that it works out. I mean, it's still a nice potential trade setup, but I want to wait and see some kind of bottoming pattern. This probably coincides with like the overall market bounce, though. And we probably do get a nice trade setup out of it. But I don't want to just leave like resting orders in the books right now and then just like enter and get stopped out like immediately because Zillow decides to go down like another 10%. Wish is it's on a fast track straight to zero. I still have some of this too from like one of the trades along the way. I think it was from like back in here. So yeah. But I mean, it's okay because it's somebody else. It's some loser's wish. I have some loser's wish. I just kind of put it in my pocket. I just kind of slid it away. And one day maybe I'll open it back up and it'll be worth something. But right now, it's just a piece of paper that's worth $2.45 with someone else's wish on it. God, this thing is just completely wrecked. Completely wrecked. I mean, somebody's going to buy this, though. Look, this is exactly what happened with Blizzard, Activision, that I always talk about. These things get absolutely wrecked, and then all of a sudden somebody jumps in, and it's M&A time, merger and acquisition time. Somebody else comes in, buys it, and it just rockets up to like $650 in pre-market. And then, you know, who knows if the deal ever goes through? Who knows if it ever happens? We'll talk about that in a little bit here. But all of a sudden, it just rips up to like $3 or whatever. You know, just get some massive pump. That's why we don't short these things after they've been getting wrecked. Bumble, same thing, just wreck city in this bitch. Massive gap back here at like $47. Nailed this one. Man, can you even imagine? I mean, we did have a nice trade on Bumble right here for like, what, 50% or something like that. But can you imagine IPO on Bumble? Oh, daddy, 58% down. Yikes. I mean, probably just keeps going straight to zero. Turns out dating apps are not great. There's like no guys on it because they're like, what? I can't send dick pics? This is terrible. Alibaba. I mean, I still don't love the China situation right now. We're definitely seeing some kind of bounce here. Maybe trying to bottom out. Got to just sit these out right now. Got to sit these out. Like, two big places I don't want to invest right now are like, China, Russia, or arguably Ukraine, Taiwan, but it's basically two sides of the same coin. Baidu, same thing, little reversion of the mean. Bear market, I expect continuation. TME, just completely melting down, same thing. JD, bear market, just melting down. Neo, finally putting in new lows. I mean, this thing is just going to, when this lets go, it's going to let go. But we are just filling out this same triangle still. So maybe it does pop back up to like 35. I mean, that's a nice move. That's like a 25% move right now, but the risk is just nasty right now. And eventually, when we get this breakdown, it's going to be, it's going to be rough. Just remember this thing was at like a couple bucks not that long ago. September of 2019, it was $1.13 before the CCP stepped in. And it went up to $64. So, sure, it looks good at $28 compared to $64, but not compared to $1. That's the only thing I need to say about this. But eventually, I think Neo will be good. But I think we'll be able to get it much cheaper. Much cheaper. It's been very resilient, too. So, EDU, unfortunately, I do still have this position. It's like the longest position I've ever held for an actual trade, and it's close to just being done with. I mean, but it is what it is. It's fine. It happens. It'll probably get waxed here eventually. I may even keep some of it just because eventually. This is an actual legit company, and I do believe in it, but the trade has just not worked out. I mean, just the fact that it's gone sideways for this long is a fail, in my opinion. Even if eventually it went up, it would still be a fail because it took so damn long. NVIDIA, so obviously this is what we talked about with semiconductors. So what are the signs? Yield curve inversion starting to happen. Check. Semiconductor space topping out starting to happen. Check. What are the other ones? Energy prices spiking to unsustainable levels. Oil, nat gas, coal. Check. I mean, we're starting to see, transportation sector topping out. And what month is it? January? Check. Those are like 4 massive things that tell us markets are topping. Like, not just like a little top here, but like an actual like cycle, like legit top. So on top of that, the inflation and the Fed's going to have to raise rates. This could be like an actual like market top. Like a 5-year, 10-year, 13-year top. Not just like a, hey, I'll see you in 3 months at new all-time highs top. So NVIDIA, we've got our target at like 231, which is a previous high, and also the moving averages. AMD, looking like we're going to retest our yellow support/resistance breakout, 118. Probably going to line up 200 moving averages. Intel, still just total trash, absolute garbage. Like, I hear like the talking heads are like, Intel has underperformed. I fully expect it to be the winner of the next. Sure, it still hasn't put in a new all-time high from 2000. So, probably for like literally since 2000, they've been saying Intel any day now. I'm like, okay, 22 years later. Okay, boomer. TSM, Taiwan Semi, finally had that breakout, but unsustainable, in my opinion. Going to come back down. I fully think this was just a short squeeze. I would not be surprised if like a month from now, Taiwan Semi is back at 107. Or eventually this just ends up being you know, basically a double top breakout, and then break down, measure move, you know, and realistically, I mean, that's like the actual resistance. This was just that range we were trading in forever. You know, obviously that 15% move was nice. Would have been nice to obviously play it out to like 140, but it is what it is. SMH, so the semiconductor ETF, again, just melting down. I mean, we're breaking that key resistance / support, and here we are looking like the 200 exponential and simple target, 270 is in the books. We obviously bearish divergence playing out. Same thing over and over again we're seeing on these. ARK, oh no, Queen Kathy. Oh no, Kathy. Oh, what is you doing? How long till Kathy just steps down and just pieces out on everybody? The cult will still be like, you got to respect Kathy for retiring. They're like, any day now, though, just because she's not in charge of the ARK fund anymore doesn't mean that the 5-year time horizon is going to come true. 5 years from now, ARK fund is at 0. She's like, well, I did say 5 years from now, though. For 5 years from now. Gotta love old Kathy. Oh, man. So where's ARK going to go? Is it going to go to $58? Is it going to... I mean, what is happening, Kathy? Look at that. When did we draw this target in for the ABC correction? Does anybody remember? When was this? This was like 7 months ago. And now here we are. We almost did it, guys. We are... Look at that. Would you look at that? We're 4.85% from the target. We did it, Kathy. So, yeah. I mean, that was just our 50% retracement from the low to the high. Took a nice little move back up on that scalp right here. Underperformed. And now here we are at the target. A couple percent away, though. I mean, but let's not get greedy either, though, guys. You know what I'm saying? We don't have to get it back down to $72. I mean, let's not. Come on. Let's give Kathy a little credit here. She's only lost 52%. It's not that bad. Okay? It's not that bad. Could be worse. Could be 55%. Teledoc, completely melting down. Trash. At support, though. God, look at all these things, man. These were like the high flyers. We'll just make our box of losers a little bit bigger. So, as of now, no one has ever done well. Do you remember when we broke down from this and I was talking about the retest on Lemonade? That was at $81. Now it's at $31. And the top on Lemonade was back here. And I don't mean to laugh at you if you own any Lemonade, but it's down 83%. Wow. 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 I mean, oh, meet Kevin pushing that lemonade. Good job, Kev. Good job. He's like buying the dip on Lemonade. I'm glad you paid for those price signals. Oh, man. I can only imagine meet Kevin's group. I like Kevin, by the way, for the record, and the Millennial Money guys. I find them entertaining, and their banter is hilarious. If you don't know who they are, they're hilarious. I highly recommend you check them out. But like Graham Stephan and Andre Gick and all those, they're freaking hilarious. But, I mean, the truth is, though, they really don't know shit. I mean, they know shit about a lot of stuff, but not technical analysis or, like, actual investing over time. But they're all, like, the young guns and everything. And they are freaking hilarious. But Kevin was talking about how he's raising all this money and he got his margin down to 0. And, I mean, the dude's, like, 100 millionaire or whatever. So he's fine. All right. So I might be busting his chops, but he's going to be okay. But he was like on the most recent episode they did, the one before that, he was like, no, he missed the last one. The one before that, he was raising all this money to buy the dip. And then in this episode, you could tell he was crushed. He was like, well, I don't really have any money to deploy because I bought the dip and then the dip took a dip. It's like absolutely hilarious. But anyway, we'll keep moving. I definitely recommend those guys, though. They are freaking hilarious. Palantir. I mean, look, we almost hit the measure move on this thing. Just getting absolutely decimated. remember too, Palantir's going to the moon. They're buying gold, and they have the software and the contracts with the government and blah, 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 blah. Complete meltdown. Trash. That's why we don't listen to the news and believe anything anyone says. Trust the charts. Listen to the news for entertainment. Unity, melting down. I actually like this as a company, but it's completely melting down. And you know what's going to end up happening with this? It's going to end up melting down low enough, and then somebody else is going to buy it out. It's going to get that M&A treatment, that sweet, sweet M&A. Where is it going to happen at? I don't know. Probably like an ascending support line, way lower than anyone ever thought it was going to go. Probably way, way down here somewhere. I mean, we're almost there now. Probably at $100. Probably at $100. Somebody's going to step in and buy it. Who's it going to be? Well, if Microsoft got Blizzard, I don't know. Maybe Apple, maybe Amazon. Somebody big's going to come in and buy this. Watch. Maybe Metaverse. Corsair. I mean, this is kind of holding right now, but I fully expect this to just break down. I mean, next support is at like $18. This thing's just going to keep melting down, which is a shame because they make great products. I mean, this stream was brought to you by Corsair. But not because they sponsored me, but because the computer literally has Corsair parts in it. But again, doesn't mean just because I like a product does not mean the stock is good. Does not mean the price of the stock is good. Does not mean it has value. Does not mean it's good investment. You want to invest in Corsair? Buy parts for your computer. PayPal. PayPal. Hitting those new lows. And look, oh look, the Adam and Eve double top pattern playing out. Oh, we're already halfway to our target. Is PayPal going to 161? Is it going to 138? I mean, probably. This thing is just getting absolutely smack daddied. Block. Old Square. It turns out changing your name does not actually help, apparently. Your stock will literally just completely melt down. So yeah, we had the range. Broke down from the range. This is our measure move. Same thing. Almost finishing it out right there. Target is still 100. Nice round number. And there's a green line there, so that has to be important. Oh, that was the previous high from back here. So yeah, $100. I mean, this thing was just at 280, and it's at 128 now. What happened to Zoom? We don't even look at that anymore. We just gave up. We quit. We quit Zoom. I probably just never loaded it back up and just realized. Twitter, tweet. Straight up trash. I mean, this thing is only going to get worse too. I mean, if you thought Twitter was bad when Jack had it. I mean, this new dude is like, he's like the wokest woke to ever woke. And we know how that does for businesses. So I fully expect Twitter to go to zero. eBay, not looking good. Bear market confirmed. Woo, woo. Breaking down. New low. Lots of support through this area, though. Lots of support through here. So we'll have to see. It's got a couple stair steps along the way down. I mean, at this point in time, we should probably just Fibonacci it, honestly. So from that CVD low to high, we're basically at the 236 right now. So confirming that was essentially the top. So, you know, that was probably our bounce already. Now bear market. So realistically, probably, man, wow, probably like $52. Probably that $52 holla. Yeah. Yep. Amazon. All right, so breaking down from the heart line, confirming bear market now for the first time on Amazon. So that's definitely a big deal, as this is one of the leaders. It's one of the big boys. So I fully expect us to get our target at 28.72. The real question is, this thing took so long to get down to our target, you know, assuming it gets there. When it gets to $2,872, are we even going to want it when it gets there? Or are we just going to make it keep going down? Are we just going to make it suffer? Just keep dumping. And then eventually we might scoop it up later on for pennies on the dollar. If you're lucky, Amazon. If you're lucky, Amazon, we might scoop you up. If you ask nicely. Might even have to beg. We'll see. I don't know if it goes that low, to tell you the truth. I don't think Amazon's going anywhere, but I mean, we have seen it lose 90+% of its value before. Don't think it happens this time, but I mean, that's like my hard line in the sand. If it goes below 2,000, like the drones have like completely, the AI has like taken over Terminator style, and there's like little drones like hunting people. I think that's probably the only scenario we see it down at 200. Could happen though. I mean, could happen. Or that might have been Terminator 2. I can't remember. One of the Terminators. Can't remember which one. The liquid metal guy. Not the first one where Arnold's the bad guy. Yeah, I mean, realistically though, we probably do get a nice scalp out of it. I like 28.50 though. But again, we got to see what the markets look like when we get there. Same with Apple. I mean, I'm going to definitely be buying the dip on Apple, probably like right around this juicy top/bottom, and the 200 exponential and simple right around like 150. But what does the market look like when we get there? We really got to see. We got to switch to longer time frames. Got to let it play out. But that could be. A lot of these companies are treating Amazon's or Apple's or Microsoft's as like their cash positions because they have to deploy their capital. So once they go to deploy their capital in these other stocks that are down like 50%, 40%, 60%, whatever it is, we could actually see them bouncing while the big names continue to sell off, which is going to put some serious pressure on the indexes because the money's going to be transferring from the big caps that were holding up the indexes and the heavyweights into the trash stocks that are getting absolutely wrecked that don't make money. So even though it's staying in the index, because of the weighting and because of like how far down they are, we might not see the indexes. They may just be going like sideways or kind of melting down. So we'll see. We'll see how it all plays out. But no surprises here. So Facebook, aka Meta, back down at support right here. We'll see what happens. Looks like a rejection. Looks like it tried to bounce and got rejected by the 200. Rolling over damn near in a bear market. We'll see. If we take out this low right here on a close at 306, this thing probably just completely melts down. I mean, not that bad, though. This is probably the saving grace for Meta, was the fact that it chopped around for so long before that breakout. It's got a nice support at like 286, so. Google McDougal. Basically at our target right now. I mean, it hit it, bounced, coming back down to it now. 200 exponential and simple. Again, if it breaks down from this area, this thing has just been melting up. So it has a decent amount of support on the way up, but it's basically just every one of these like peaks, every one of these tops. You know what though? Now that it's starting to look like we're confirming a top, let's put a fib on here and let's see if each one of these like areas correspond. And then we can see if the bots or algos had planned this as the top the whole time. Let's just see. We'll do it in real life. Maybe I'll just be completely wrong. Or maybe we'll just be like, that's weird. Oh, that's weird. So did this top out? I would say probably yes. I mean, look at this. Literally, that lines up with the 618. That lines up with the 0.5 right here. Look at this. That lines up perfectly with the 382. That lines up perfectly with the 236. That's our top. I mean, if this isn't literally proof of what I always talk about, how the targets are already laid in stone, the bots, the market makers, the algos, the whales, the whatever you want to call them, okay, leave us these breadcrumbs to tell us, okay, the top is in because look, this is not coincidence that these levels randomly, I mean, I've never seen a clearer stair step in my life without putting like a Fibonacci on a chart. And, if we try to put it on right here and we said, oh, look, everything lines up. Sure, maybe. Everything lines up. Sure, maybe. Everything lines up. Sure, maybe. I mean, that's the crazy thing about like these fib levels is when you look at them at the various levels and then you look at the Fibonacci extensions and the way the various like targets pull up, you see these levels continue to basically play out. So could we put in a new high here eventually and maybe they line up still? Sure, but this looks awfully like eerily like, I mean, it doesn't look like coincidence. Let's put it that way. So, if this area holds 200 exponential and simple, sure. Otherwise, I expect Google to pull down to the 236 and then, essentially confirming market cycle, macro top, something like that around like 2350. At which point in time, again, by then it would look like this thing's in a bear market. So we'll have to wait and see. Microsoft at support at our target. We'll see what happens with this. I mean, they're going to buy Blizzard in like, 2 years or something like that. And then like I mean, who even knows? They're gonna have like regulatory agencies breathing on their neck. Oh, I don't know about that. We don't want you owning the whole metaverse. It might be too much power, consolidation. Yeah, I mean, like you have two companies that have horrible reputations for the way they treat women staff members, and they're like, "Hey, you want to team up and do worse?" Like, what? Maybe they should team up with somebody with morals. I mean, that's not fair. I mean, it is. It's true. But, at the same time, it is kind of mean. Like, hey, we'll treat women however we want and stop being mean. Okay. See how it worked out for Blizzard, Microsoft. Definitely wouldn't want to be working there if I was a lady. Let's put it that way. Yeah, so we'll see what happens with this. I mean, at support right now, 200 exponential and simple right below it. Probably, it's got quite a bit of support along the way, so we'll see what happens. We could drop a fib from the bottom right here and see. Yeah, again, I mean, it's lining up pretty good. Not quite as clear cut, but we see some pretty clear interactions along the way for resistance and support. Yeah, I mean, that looks almost perfect. So I fully expect this at like 279. But we have the 200 exponential on simple, and we haven't violated it since like the big dump. So realistically, if we do violate it, this is going to, I mean, again, this is going to basically be when the Russell dips down and everybody's like, oh, Russell's in a bear market. This is serious. And then all of a sudden these big boys start rolling over. And then all of a sudden we see the S&P and the Dow and all these other ones. I mean, it's going to be no joke then. It's going to be hard to deny that the buy the dip mentality might not be the best way to go. DocuSign, putting in new lows. I mean, this thing is like, it's definitely going like much lower. There's no support. It's going to $91 next. There's literally nothing. There's nothing to hold this up. I mean, what do we got? 104, then 81, but really maybe 91. I don't know. This just looks like trash. I'm not going to buy at these levels, but there's definitely an argument to be made for a potential scalp trade. Old DocuSign. All right, I'm going to grab a 2-second drink and we'll keep on ripping. I will jump in the chat here in a second as well. All right. What you got going on in the old chat-a-tat-tats? The last time I traded on it was October. I have no idea what you were talking about. Oh, that was your account. I got you. 191 randomly. Yeah, I got you. That's fine, man, but can you explain? All right. Where the hell did I leave off? Wait the 10 days, try to deposit it? Yeah, I mean, I guess, right? Hey, it's in your account, so I guess it must be yours. Palantir have any gaps down? No, not really, I don't think. Acetose said he'll cover it later. What's up, Daniel, by the way? Cool Sheet says, what's up, bro? You got gangster content and indicators, brah. Much love. Hey, much love to you, too, my Cool Sheet friend. Appreciate the kind words. So yeah, we nailed Palantir already. Let me know if I missed anything. I don't know if I specifically talked about any gaps down. I don't think there was any gaps down, but let's do some crypto. Let's look at the crypto coins, bro. Bitcoin futures chart. So it looks like we're trying to carve out a bottom here. I mean, we basically have at this point in time, a double bottom. Doesn't look great, but we do have a hard buy signal coming out of the bearish control zone. We have 1 drive, 2 drives of bullish divergence. We're basically double bottoming here on the daily at our previous support. Trying to carve something out here. Now, we have obviously confirmed a bear market, but we do expect at some point in time that reversion to the mean play. So at some point in time, I think Bitcoin will push back up to between 46 and 48,000. Now, do we play the move back up to the upside? I like that trade. I like the reversion to the mean trade. So I will play that trade. But the most important thing to remember, the most important thing to remember is this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. But the second most important thing to remember is we're now officially in a bear market. No, we're not. You're being mean. Shut up. We're officially in a bear market. So we're not looking to buy the dips anymore. We're looking to sell the rips. So I think when we come back up here for that push back up to like 46 to 48,000, depending how strong it is, maybe it overshoots if it's real strong. Maybe it underperforms if it's real weak. You know, who knows? And we can gauge the market and its strength or weakness by where it comes up to. But we're looking to sell into that. So if we're looking to scalp this move to the upside here, let's say right now we just say, okay, let's do it. We're looking for like a 10 to 12% move, not a big move by any means. But when we get back up there, this is going to act as resistance. The moving averages, the previous, support turn resistance. So we're looking to sell into that. Anybody that didn't get to sell before this breakdown right here is going to look to unload their position at that level, at break even or higher than we're at now for less of a loss, whatever you want to call it. At which point in time, I fully expect continuation to the downside. Now, is it possible we find support here, we rip to the upside, and then we bust out and get back up to like 51,000 for like a retest around this area? It is definitely possible we get back up to like 50K. But again, that's only really a like 22% move. Maybe alts outperform a little bit because they outperform to the downside in a bad way. So maybe they outperform to the upside in a good way. But what is that going to look like? It's going to look like a potential another head and shoulders pattern right here. All right. And then when we look at this really on like the macro scale, then this failed head and shoulders that we ended up breaking out from off the triple bullish divergence, which is good. We played that. We did well. We did fine. We scalped it. Then we had the bearish divergence breakdown from the double top. And then this potential head and shoulders breaks down here. And then we find ourselves down here again at that 30,000 level. And now we have what amounts to basically, a double top on like the macro over the last, from December of 2020. So now we have a potential double top over like a 2-year period. Now it doesn't have to happen like that. Maybe we go to new highs. Maybe it just breaks down right away and we don't get that head and shoulders. Maybe it shoots down through 30,000 and goes to $4. I don't know what's going to happen, okay? I don't know what the liquidity on the exchange is going to look like. I don't know what Michael the Sailor is going to do. We can just point out key areas we're looking for. But if I had to guess what's going to happen here, I would say there's a good possibility that last time this head and shoulders failed and everybody was looking at it. So maybe this time everybody says, well, last time it failed, it's going to fail again and go to new highs. And then this time it does play out head and shoulders. And then essentially it just looks like a giant double top. You guys know, I already think we've topped out. The 4-year cycle is done. Everybody is still bullish. Now everybody's getting bearish. So now we probably push back up. Then everybody gets bullish and goes, here we go. Bags are packed. We're going to the moon. Oh, God, no. And then we go to 20 grand or $7,000. No, don't you say that. Being mean. Don't be mean. Leave Brittany alone. Leave Biddy alone. So weekly Bitcoin chart. It's just a clearer picture of what I'm talking about. We broke down from the 821. We're at key support. We technically put in a new low. So in all reality, we got to expect this thing to go to 32 grand. What happens before then doesn't matter. At this point in time, we really have to pay attention to selling the rips. And then obviously we have the 200 exponential and simple on the weekly coming in at like 20 grand. None of this was unexpected because we obviously have clear weekly bearish divergence. So we have so much divergence. If ever there was one thing that Bitcoin chart, especially futures, tells us clear as day, it's that when we see divergence, we should listen. And that's why this little bullish divergence potentially playing out right here could be a nice little quick 10, 12%. But we don't want to get married to it. All right. I'm not going to be buying any gas in Bitcoin anytime in the near future. All right. So keep in mind all the cult members that are like, I'm just using BlockFi to borrow against my Bitcoin because I don't want to pay taxes on it. I'm like, okay, sure. Well, when your Bitcoin gets liquidated and then you owe the taxes because it force sold your Bitcoin and then you borrowed against it and now you don't have your Bitcoin, you still owe back taxes and your Bitcoin got liquidated. I guess probably didn't think of that. It's not real estate, okay? It's fake internet money. I mean, and I'm not trying to be mean here, but when it happens, let's not be surprised. So the regular Bitcoin chart, Bitstamp, pretty much same thing. We're seeing that bullish divergence, picking up a little slope, trying to build some momentum, but we're not building any momentum though. The 200 simple is technically still angled to the upside because of our weekend price action. I did expect some kind of move over the weekend, this past weekend, and the bulls are dead. So we'll see what happens, but bulls are not exactly doing much of anything lately. They're weak. So maybe we don't even get the push back up. Maybe we don't even get our 48,000 target. Maybe we just break down to 38,000. I don't know. We'll see. Again, same thing. I'm not even going to look at the weekly on that. Ethereum has just been melting. Oh, wait. We have that channel, though, don't we? We should at least pull that up. Oh, okay. So I did draw the head and shoulders on you. Damn, I'm good. It's like I've done this before. I have something like this on my other chart that I'm basically paying attention to. So that's essentially what we're looking at right now. So we're basically just looking at this channel, basically top, bottom, kind of just acting as support, top acting as resistance, bottom again acting as support, and then essentially bouncing the heart line, getting rejected by the 821. So we'll see what happens. If and when we get the breakout of this channel, let's just say, for instance, that we do get the bigger bull move, the breakout to the upside. Let's just say it happens right around here. That would basically give us that shoulder. And then it's like, oh, it's bullish, bro. You were wrong. Lengthening cycles, dude. We're going to the moon. And then, like, that's everybody buys in, breakout. It takes out, maybe even takes out this little high right here. And then they're like, oh, higher high, bros. Let's do it. Bags are packed. And then, like, one giant candle comes in. And it's like that bleeding eye meme guy. Can't go lower, bro. This is the lowest Bitcoin will ever go. I hope you packed your bags, bro. Oh, my God. Ethereum. Breaking down from the 200 exponential and simple. Starting to roll over. We have some key support down here. We're not really seeing that same divergence on Ethereum. So we obviously just have a lower low on price action right here. So while Ethereum has been holding stronger for longer, we're not seeing that same buy signal. We do have like a bunch of resistance at like the exact same spot. So we broke down from this ascending channel, came back up, tried to retest it. Now the 200 exponential and simple are kind of rolling over. So if we can carve out like a short-term bottom right here, we probably just get rejected again at like that 3,500 range. But again, that's like a 10% little scalp to the upside. And if we break out past 3,400 roughly, maybe we get a little double bottom. God, I can never say that. And then maybe we push back up to the heart line for another lower high back at like 37.32. We'll see, something like that. I mean, I don't want to get overly bullish on these things, but I really do think we're going to get a little pop back to the upside. But again, it's for a scalp or unloading positions, in my opinion, not like holding. I'm not going to hodl, bro. ETH Bitcoin ratio broke down below resistance. Does not look good. Total market cap, the brat market cap. Oh, they fixed the chart. Hey, good job, TradingView. I don't know if anybody else saw that, but there was like there was a gigantic candle. Like it was obviously a misprint, but it gapped up to 5 trillion market cap, and then it was just red all the way back down. I'm like, oh, something exploded and then imploded, or it was misprint on TradingView's part. So obviously it was a misprint, which I did expect. Because I don't really think crypto is going to gain $3 trillion in like 15 minutes. I could be wrong. Could have been cum rocket shooting straight to the moon. And then it blew its load and fell straight back down. Maybe it was SHIB. So crypto total market cap, bearish divergence, 1.618 Fibonacci extension target from the previous 20,000 all-time high. Last bull cycle, 821 crossing back to the downside. We know we have support at 1.28 trillion. We know we have support at like 1 trillion basically. I mean, we don't want to lose $1 trillion. We don't want to lose $1 trillion. So, but that's what's going to happen if we keep going down. That's next. So we're seeing the Bitcoin dominance chart. So obviously we have the triple bullish divergence. We're popping up off the bottom right now. So if this continues, I mean, that's a bullish engulfing candle on the weekly. So if this pops up here, we expect it at 42%. Next target, 45%. Potentially breakout, measure move target to the upside. Looks like it's happening. Triple bullish divergence. Looks like it's playing out. I fully expect altcoins to get wrecked. More likely than not, though, this is Bitcoin breaking down and alts breaking down way faster. Because the truth is, if Bitcoin goes up here, alts probably go up more. So that's not going to correspond with this. So we'll see. But realistically, this is telling us there's probably a higher probability that we're going to break down, not up. But, I mean, we'll wait and see. Stinky Linky failed to hold the 200 exponential and simple, melting back down. That's why we locked in those profits, 40%. And now it's by Felicia. Polkadot, weak. Rolling over, total trash, breaking down from key levels, at support. I mean, if it breaks down from here, it basically just goes to what, like $16? You're going to be a teenager again soon. Good job. Uniswap, still trash. Giant triangle. Eventually it just breaks down to what, like $9? XRP. XRP is a good investment. And I'm super bullish on it because Ripple Labs is awesome and they're definitely not going to lose the SEC case. So XRP, 2 thumbs up, bros. Oh, I can't even do it. Can't lie to you guys. XRP is trash. It looks absolutely horrendous. It looks like total garbage. XRP going to 50 cents and fast too. No, you promised. You said you would go a whole stream without being mean to XRP. Sorry, guys. Can't do it. Can't lie to you. Can't do it. There's plenty of other guys. There's like a million other people that are devoted to XRP that would just tell you XRP is great and they're going to win. Go watch BitBoy Crypto. He'll like rub your balls and tell you about how sweet XRP is and how they're going to win, okay? Here, I give you the truth. Matic, I mean, it doesn't look good. Breaking down. I mean, this one was strong for a while. Had some really nice plays, but Matic is going to like $1.60. I mean, this thing was at like 60 cents not that long ago. We've been crushing on Matic, so let's go ahead and just let it roll over. Bat looks terrible. I mean, this is like the giant, you know, I mean, we were talking about this. Head and shoulders, descending triangle, bear market. I mean, Bat, honestly, it looks like it's going to 70 cents. 70 cents. 0.70. That's my target. So 70 cents. Or, depending on where you're from, 70 cents. And if it keeps going down from there, might visit our rapper friend, 50 cents. We'll have to see. ADA Cardano. Yeah, so obviously the Sunday is melting. Everybody got excited. We talked about these levels ahead of time. Fully talked about this. You know, actually a couple group members were, I think, partaking in the move from here to here at least. But this is exactly what we're talking about, liquidity pumps. So what happens? Okay, somebody is in Cardano or in Bitcoin, wants to get out of their position. So you start buying up Cardano. It's total trash. It's been selling off forever. You know, Sunday swap's coming out soon. They start pumping up the price. People start jumping into it. It breaks out from this key level, this pink resistance or the 236. And then what do? They just straight dump on your face. Reversion to the mean, retest of the 200 exponential. Total garbage. Charles is a bum. Cardano is irrelevant. It's not going to get smart contracts. No one cares about Sunday swap. Let me be honest here for a second, okay? Financial institutions in real world, like actual people with brains, are probably not going to invest in things like long-term called like food and then swap afterwards. So if your name is like food and then it ends in swap, it's probably not a great project. Like in my opinion, maybe I'm wrong, okay? So if you're like sushi swap or Sunday swap or like Starburst swap, like it's probably not a legitimate financial product. But maybe I'm wrong. I don't know. You can throw a couple other ones in there. Cookie swap. Like, I don't even know, but probably not great. But in the meantime, Cardano is definitely still trash. So for a moment, though, it was a shining light in a sea of darkness. And then it was immediately trash again. But the whole time it was trash to me, though. I didn't change my view. But don't tell Charles, because he's just going to go on live streams again and cry. Oh, Charles. Sushi. Oh, speaking of food swaps, let's be real here. Doesn't look great. Look, if you're going to get into swaps, try something fun at least, okay? Like, I don't know, wife swap or something like that. They still have that show? That was like kind of fun, exciting, you know, if you're into that stuff. Not really my bag, but, you know, if you want to do a little swinging. But don't mix the two together. You don't want to do a wife swap and then bring sushi into the mix. That could get a little weird. But that's a different show. That's on Stars. Oh, God, what's wrong with me? Hathor. Yeah, this thing's looking rough. I mean, it's at support right now, but this is looking super double toppy, so we'll see what happens, though. Still above 200 exponential and simple, so it's better than most. It probably does get a little bouncier, though. It's pretty oversold. No divergence or anything, though. Maybe on shorter time frames. I don't know. I'll have a look at it in the group for you, brother. Avalanche. I mean, I probably don't even need to. You know what you're doing. Avalanche, AVAX, or Avalanche, depending on where you hail from. Again, looking super, super double toppy. Does it bounce here, though? Maybe. Going to try to put in some kind of bullish divergence, maybe, but don't love it. Yeah, not really. Not really. I mean, these things are overpriced as hell. Same with Sol. It's at the 200 exponential and simple now, though. And it did put in a little bit of bullish divergence here. We do have a low here and a higher low here. We have a low here and a lower low here. But it looks like it's rolling back over. So maybe this wants to put in a third drive of bullish divergence. Maybe even like a double bottom right here. But also that turns into a third drive of bullish divergence. And then we bounce. But I mean, really, I think it just takes us back up to retest like 155 rather. But I mean, that's probably a playable bounce. That's like 12%, right? Maybe more, depending on how high it goes. Probably 14% playable move right there. Could run a pretty tight stop on that too. Because if it breaks down much lower, we don't really want to F with it. I mean, realistically, it's like a 2-to-1. There's not a ton of trade setups right now, and the market is like super risky in my opinion, just because everything looks like trash right now. But I mean, that's the best part about like real time, is if I see something in real time, I can holler at you guys like in the group and stuff, as opposed to here where it's every couple days, because it's going to be quick little pops here and there. I don't think we're going to see like a big market rotation, like back bullish all of a sudden anywhere, crypto, stocks, whatever. I think it's just going to be like maybe a quick little pop in like certain sectors or certain stocks or cryptos or whatever. But I just don't. I think the market sentiment is legitimately changing, at least till Powell comes out. After we hear from, sorry, that was like too loud. After we hear from Powell in the next couple of days, you know, and he lays out his plan again or whatever, if it's not like too overly hawkish or just by giving the market some certainty, maybe that changes a little bit. Excuse me. Atom looks pretty strong, hanging out at these highs. Probably the best chart we've looked at in crypto so far. Sort of looks like it's pulling a bullish reset, so maybe this is the one to look out for. This thing does look like it kind of wants to rip. If everything else looks like trash and this just holds strong at the highs, this probably does rip. I think we had a... Oh yeah, we got a couple deals in here. What was it? The fib extension target 1.618, $72. I mean, this is, if you liked it at 43, gotta love it at 36. That's a 100% move. I think I laid these out, I think, for somebody, but I was saying specifically I was not interested in them. I do not have a position in this. But honestly, this is probably the one to play. Yeah, that's almost a 100% move right there. We'll see what happens with this. If everything else looks weak and this just goes sideways while these reset, I think this probably does pop off. But I don't really want to buy into momentum at the top. I would rather take a shot at it if it holds this level and we see the indicators kind of cool back off. But I'd be looking to enter it on like a 4-hour time frame. So we'll see what the shorter time frames look like. We did break down from that ascending support line though. I don't know, man. We'll have to see because this thing could go to like $28 quick. Don't want to lose 25%. I mean, obviously it's stopped out, but MicroStrategy looking good. Looks like a strong investment. Definitely not a scam. Michael Saylor is a good CEO. Can you guys tell me I'm not a good liar? Let's be real here. Not a strong liar. Lying is not my strong suit. So 409, our next. I mean, we're just hitting these targets to the downside quick too. 40 whatever 9 or 6 our next target, and then after that the 0.5 at 338. So, you know, where do we? How much is old Mikey down? Ooh, Mike and Kathy are like competing for like the worst. I think Kathy's winning right now, so Kathy is technically beating Michael. Or I guess technically, depending how you're measuring it, if you're going golf rules, like if you're going for whoever's down the most, Michael is winning. If you're going for whoever's down a ton, but not quite as much, Kathy is winning. But also, MicroStrategy is total trash. So we'll see if Mike can top his previous record from the 2000.com bubble burst, which I believe is a 99.9% loss of value in his stock. We'll see if he can go the full 100. I don't know. It's going to be tough. It's going to be tough. It's hard to beat 99.9% loss of value in your stock, but it can be done. It's happened before. Hood, just melting down. Complete. I mean, Vlad is like, you want to see 99% to the downside. I'll show you $0. I mean, this is going to get bought. Someone's going to buy this up. Who's going to get it? Some actual... Oh, man, I don't even want to make a prediction, but I honestly think this is going to get M&A'd. Vlad's going to sell this thing out so quick. We'll see. I think one of the big players is going to buy this up. Completely change the reputation. They're going to be like, oh, I love the Robin Hoodians, and I'm going to change it. We'll never do that again. We'll never halt trading on you bros and lady bros. We're all about the diamond hands. Free AMCs if you just buy back into Robinhood stocks. Coinbase, I mean, looks terrible. I mean, revisiting the lows right here. This is it, guys. We talked about it. Here we are. What is it? 208, I think, was our target. So we're dollars away. And then after that, it's just, I mean, it's complete meltdown. Complete meltdown. So this is the Boeing of crypto exchanges, okay? You have one job. Just make it so people can trade crypto. And then it's like, oh, I'm going to trade this crypto. There's so much volatility. Buy. Oh, Coinbase is down. Damn. But at least people don't die when Coinbase F's up. No offense, Boeing, but the truth hurts. Bed Bath & Beyond looks like total trash, getting ready to melt down. I mean, this is going to zero. So, like, it's literally going to zero. They're, like, located at malls, and they're trash. They just closed 38 stores. Retail is dead. AMC, new lows, total trash, garbage. I mean, this is probably what's killing the Russell. Who knew? This is like one of the biggest names in the Russell. So if AMC pops off right here, it can literally save the Russell and possibly the whole stock market. So I guess technically the entire market rests on the shoulders of the apes. So if they can wipe the pee out of their eyes and stop throwing poop at each other and rally the troops, if they can pull their diamond hands out of each other's butts, maybe, just maybe, they could save the whole stock market. Everybody wants Jay Powell to do it, but could the apes be the actual savers? No, probably not. It's probably just trash. Probably just a garbage movie theater. But you can buy popcorn and Dogecoin, so that's good. GME, oh man, this looks even worse. Bear market, hit our target though. Look at that, old GameStop-a-rooney. I mean, these things are all trash. If they were trash before, they're definitely trash now. I mean, when good stocks are going into bear markets, you don't want to be holding the AMC and DraftKings and all this Bed Bath & Beyond and stuff. I mean, DraftKings just completely melting down. Remember when Kathy called the bottom? She was like, this is the bottom for DraftKings. Mergers and acquisitions. They're hooray. We're doing great. Oh, God, no. Sorry, Kathy. Activision Blizzard. Okay, so obviously gapped up. This thing has been just melting down. So we have... Oh, this thing is such trash. They make really good games. like over the years, but man. So we got basically a gap right here. We started to fill, and then we gap back up over here. So now we have another gap right here. Let's be real here though. They announced the price. They quote unquote made a deal. Nothing is official. It has to get approved now by various regulatory industries. So this is never going to happen. If it does happen, it's going to happen in like 2 years. So I guess it's just going to hold right here for 2 years. No, probably not. It's probably going to come back down and at least fill the gap at 71. I mean, realistically though, it probably fills both these gaps. So, I mean, this is probably like your buying area. If if you were interested in this, between 65 and 70 bucks. Does not mean it doesn't go to like 30 though. Doesn't mean the deal doesn't fall through. This is realistically probably a fake merger acquisition deal that never goes through. I was talking about that in the private group. I'd say there's probably a 75% chance this deal never happens. But, that's just my opinion. That's my guess. It's just a guess. Probably just goes to like, yeah, I mean, it's 60 bucks. We'll see. So gold popping off here a little bit of action from the old Yellowstone. Not the park, the metal. It's still just trading in that range. Okay, so we have this triangle, we have this flag, we have this pennant, whatever. Until we break through the top of the pennant at like 1850 or the 0.5 previous high right here at like 1864, I don't even get a little bit excited. If we do, then I'm going to start looking at that previous level. But I mean, this stopped out at the 0.5, this stopped out at 618, so I got to just see something from gold. I mean, how many times has it fake broke out since it topped out here in August of 2020? Like a bunch of times. Fake broke down a bunch of times, fake broke out a bunch of times, still has done nothing. So can't get excited till then. Calm down, TradingView. I'm doing something. Get out of here. Silver found support right here, double bottom, bouncing back up, retesting 200 exponential and simple. It's in a bear market. It just looks like a reversion to the mean trade for me. If we get back above the heart line, if we get above this previous high right here at 25, I think we probably do revisit the top of the range. So between 27 and 28. Does that happen though? I mean, probably not. We'll see what happens though. The money's got to go somewhere. So it's not that hard to believe it would go to gold and silver because they're just so, everything else has been popping off like crazy and they've done nothing. So arguably they're undervalued. Gold silver ratio. So look, I mean, I was expecting this to go higher. We topped out at the 200 simple and it's rolling back over, lost the 200 exponential. So if we come back down here to like 73, 74, $73.74, no, 73 silvers and 3/4 for 1 gold. If we break down from here, that probably was the top. And then silver probably does go up faster than gold. Like the trend reverses. And then honestly, like that probably means gold and silver are back in the bull market. So if this takes out 70, let's just say 73.50, 73.5 silvers per gold on the weekly. This probably tells us that silver is in a bull market and gold's in a bull market and silver's outperforming gold. So that's definitely worth paying attention to because this may be the little secret. The metal's telling us a little secret. XPT looks like it's putting in a lower high. Had a nice little move back up here, but this is the worst metal. But it's undervalued because it's the worst metal. For now. Good change. It sure is pretty though. Copper, still just range bound, trading in the range. There's nothing to see here. It's literally done nothing for so long at a very high level. Lithium at support right here, made it back down to our level at 200 exponential and simple. What's it doing here? Is it going to put in some bullish divergence, pop up? I don't know. I don't love how this looks. Once it tags like 74.50, I'll be looking for a bounce, but I don't know if this level holds. Maybe it does. Target to the upside like 86. Target to the downside like 74.50. But I mean, it's at 80 right now, so there's really nothing to be done. Hydrogen just melting down. Complete meltdown, as expected. I'm buying the dip. I'm going to buy the dip here. I'm going to buy the dip here. I'll buy the dip now. Maybe tomorrow I'll buy the dip at an even lower price. And then I'll be out of money and it'll keep dipping. Oh. Then I'll change my name to Meet Kevin. LBS1. Lumber. Lobster futures. Looks like the old lobster traps maybe snapping here. I don't know. We'll see. I mean, if we just put in a lower high right here, that seems the most likely situation to me, is this was just another speculative run-up, especially when we see new home builders and all this stuff like starting to top out, and rates rising and everything, and like, expensive lumber, rates rising, home builders dumping. All these things are going to make it extremely difficult for lumber actual prices to like stay up here and the housing market to stay up here. And this just seems super speculative to me. It's like oil going negative is like lumber spiking right now. So it probably does put in a lower high and then just dumps back down again. We'll see what happens after that. USAS, trying to carve out a bottom here, man. This thing's been getting wrecked forever. So there's definitely some potential here. I'm really watching these gold and silver miners. If we see a legit bottom in gold and silver miners, there's going to be a play to be made there. So there's arguably the same way I'm dabbling in these like pot and like THC / CBD stocks. It could be worth dabbling in some of these gold and silver miners right now, but not just like random shitty ones, like either like SILJ or like GDX, maybe GDXJ, like, I don't know, arguably First Majestic, but it's the same as SILJ. Not buying like the total trash ones, trying to buy like something speculative, but still a decent company. I don't know. You got to do your homework. Pot stocks. These things are so wrecked. I have no problem like just leaving a little dead money in these things. Everything else been like absolutely crushing basically, and these are just straight up wrecked. And like Tilray, ACB, Hexo, all asset to book ratio is like ridiculous. Like they're trading at like an actual discount of between 50 and like 75% of like book value. So even with a little margin for error, in my opinion, they're still a good price. Now, it does not mean they can't get cut in half again, but I honestly think that this is going to be the year of the miners and the pot stocks. We'll see though. Could be wrong. But I'm okay with that because I'm using proper risk management and position sizing. Not just like going all in at like every dip and then running out of money. So, but I mean, we could easily see new lows on these things. We could easily see ACB at like $2.40. But I mean, there's going to be M&As at these levels. These are just ridiculous levels. Same with CGC though, is different. It's putting in a new low. It looks super double toppy, and it does not have the same situation going on with the asset to book value. This is still trading at a premium, which is the opposite of the other three I just discussed. So to me, this is much less appealing. Now I am dabbling a little bit, but I'm like dipping like a toenail in, not even a whole toe, dipping in my toenail. I'm like letting the steam from the hot tub kind of just waft up onto my flesh. I'm not even putting anything in the water. You know what I mean? You know what I'm saying. URA. Okay, so I really think these uranium stocks are just played out right now. They're starting to roll over. Starting to see that play. Yeah, I mean, barely hanging on to 200 exponential and simple. All the moving averages just starting to roll over on these things. They all look exactly the same. So I really do think these have topped out, at least like short to midterm. And then we'll see if they pull back on the weekly and start hitting the key moving averages. Then we can get back into these or reaccumulate the areas we took profit from, like rebuild our positions, which we'll have plenty of time to do because that uranium bull market, I think, is going to last like 5, 10, 20 years. I don't think it's going to be like tomorrow, but we could easily have 3, 6, 9, 2 years of pain, like months, 3, 6, 9 months, even like up to like a couple years of pain before we get that massive bull market. We already had a nice bull market in these. Same with copper, same with lithium, same with hydrogen, all this stuff. We had a nice commodity beginning pop bull market, and then everybody was like, commodity bull market, this is it. And that's when I'm like, yeah, okay, here, hold these bags. I'll be right back. And then airport security shows up, and they're like, sir, are those your bags? And it's like, well, they are now. Sorry, suckers. I'm already on my flight to Vegas. Yeah, see? Caterpillar had a nice little pop up here. I really don't think these are sustainable. I think this rolls back over. Could be though. Maybe I'm wrong. The infrastructure thing plays out. Same with Deere. I really think these are just topping back out here. I think these were liquidity pumps, exit pumps. Intero midstream. We'll see. If this level holds, it's probably okay. But again, same thing. I think this rolls over. We are starting to build up here, but it's at elevated levels. Bullish control zone. Momentum in its favor. If it holds, it might look okay. Cemex. Same thing. I think this trade, maybe this trade finally plays out. I mean, we're almost there. We're halfway. 21%, 740. But this is exit to me. I don't even know if we're gonna get there. Ford, so obviously just went nuts here again, rolling over. I mean, it's at that support though now, so we'll see what happens. This thing looks tarred. Did we put in some bearish divergence here? Yeah, we did. Basically double topped on the indicator oscillator and got much higher price action. Same on this one. Well, on this one we have a high and then we have much lower high. So we have some very clear daily bearish divergence. I mean, this is a liquidity exit pump, whatever. Maybe we just come back down, find support here, and then cruise around for a bit. But, I mean, this let's be real. This thing has gone nuts. I mean, everybody's like, Tesla's the greatest. I'm like, have you ever heard of Ford? Because I'm pretty sure it outperformed Tesla just a little bit. It was $7, and now it's 22. Been a while since Tesla had a move like that. GM. And don't get me wrong, I do like Tesla. I did like Tesla. But, I mean, this year for Tesla has not been good. Let's be real. Like, stock-wise. GM, it's like a worse version of Ford still. Barely put in the high. Bearish divergence. Rolling over. This thing looks like it's ready to roll over. Hasbro, holding right now. The longer this holds, the better it looks. I may end up dabbling in it. It looks terrible, though. Bearish divergence, no way. I'm not touching that. I keep saying I might do something with it, but I'm just not. Let's be real. Works. Man, this thing, I have a weird feeling this thing is just going to pop off. It keeps putting in this bullish divergence, and now it's putting in a sell by sell. It's putting in a bearish divergence signal at the bottom when it's trying to cross the 821 back to the upside. I think I'm going to take a little position on this with a target of like $1.80. That's a 50% move now. I really do think, you know what? I'm going to take a stab. I'm going to take a little stabby stab at this. I've been talking about it forever. I fully expect it to go down. Let's see what our trade setup would be. If we take out the low, I'm out like trout. I think the pushback up takes us to the 200 exponential simple. 8.5% stop loss at $1.18. Entry price at $1.28. Target $1.80. 40% upside, 8.5% downside, 4.6 to 1 risk reward ratio. I'm going to take a stab at this guy. Actually, man, the markets are so terrible, but they probably do bounce like in the next day or two. So I'll tell you what though, if we close a bad close on Friday, Monday is probably going to be so bloody. It's probably going to be so terrible. So if we get a weak close on Friday, I mean, don't look at your portfolio on Monday. It's pre-market. It's just gonna be tears. You open up your account, and it's just gonna say tears. I won't even show you actual prices. Same with any sphere right here. This thing was looking juicy. I waited so long for it to get to my target here, and then it was like looking juicy. I kind of wanted to dabble, wanted to partake, want to play the game. And now that we're here, now that we're at my target, the market just looks so trashy. I'm like, do I want to play the game now? We're on top of the red slope line. This is where we would bounce it. We're at that area, and we've kind of poked our little nub outside there a couple times. We have this descending red resistance turn support. We have the bottom of our channel. We have our potential head and shoulders. Not really symmetrical, so it could go lower. Could have a big, thick wick to the downside. But do we want to take an entry? We've been talking about this forever. Do we want to actually enter down here? I mean, that's a tough spot. 12% stop loss, though. We take out that previous little guy right here. I mean, we probably go much lower if we do. We probably go to a $1.29 if we do. So, but I mean, I'm not gonna go for the big juicy target. I'd be probably going for like 397. I mean, that's still another like, man, that's like 100% move back to the upside. Yeah, probably just gotta do that. Whoops. Oh, almost just did it again. I just have to take a shot at this. That's our reversion of the mean trade. I mean, we're rolling over 200 exponential and simple. We push back up, potentially put in like a short-term bottom here. 8.5% downside, 72% upside. 8.5 to 1 risk-reward ratio. Target of $4. Stop loss at 213. Entry price at 232. Take a stab at it. Make it nasty. All right, we did it. Nailed it. All right, jump over in the comments here. I think we made pretty good time. I know I was in a little bit of a goofy mood today. Hopefully I didn't offend any of the bots. Let's see. Cool Sheet said. Okay, I think that was from before. Cool Sheet, much love. Logan Turner Racing said, I have a chart from Yahoo with a 28K UK spike from 38K. Yahoo changed the charts. I have them both. Yeah, it was probably a misprint. Bitcoin was shorted to 28K, 30K Bitcoin in one transaction. Sailor's done it. I don't know which. Yeah, I mean, it could have been an exchange for sure. Not sure what exchange that was on. But I mean, it happens all the time if there's not liquidity on the book. So, like your stream. Appreciate you, Logan. Thank you, sir. Check December 14th. See no spike to 28K. They altered the charts. Yeah, sometimes I'll have a misprint, though. It depends where they like get their data from. 520 moving average. Yeah, I don't know. I don't really mess with that one. Coin market cap glitch. Yeah, that was, it was definitely a coin market cap issue with that weekly and monthly or market cap and Bitcoin dominance. Sent everything into the quadrant. Oh yeah, I did see that a couple weeks ago. Yeah, everybody was going nuts. But again, that was like a data feed error. Wherever they draw their info from on coin market cap or whatever. Yeah, I did see that. That was ridiculous. Saeed, good to see you, brother. Look, I know normally I go and try to pronounce your guys' full names. Oh, how about we just see your first and your middle name, Saeed? What's up, Saeed Trader? I'm just kidding. Appreciate you, brother. Thanks for showing up today. And you definitely win the longest name of the stream, for sure. Asatos. What's up, brother? Great stream. Thank you, my man. Good to see you in here. Logan, appreciate you as well, brother. Good luck with your racing. Are you a real racer? Are you a speed racer? You race the little mini carts? Or the real ones? The big boys. Off-road, on-road? I love those trophy trucks, man. That's my shit right there. Logan said, cheers. I'm learning lots. Thanks. Hey, for sure, brother. We do these every Wednesday and Sunday. Highly recommend that you go check out the like archived, basically like videos from all the previous streams. There's lots of like informational videos, chart patterns, how to read candlesticks, like everything. If you are just familiarizing yourself with the indicators as well, if you go down to the description, there's a bunch of free indicators. Also, you can go to the like video, what's it called, playlist, and there are like how to use like the different like moving averages or just different indicators or whatever as well. So there's like unlimited amounts of content that would take you like probably years to watch all of it that you can learn from. So point you in the right direction. But the world is your oyster, brother. But yeah, every Wednesday and Thursday, or every Wednesday and Sunday, rather. Oh, motorbikes. Nice, man. Scottish champion? Nice. It's pretty cool. Are you from Scotland then, I take it? That's pretty cool. Hell yeah. But yeah, I mean, that's it for today, guys. I appreciate everybody that stopped by. Thank you all for participating. Hopefully you enjoyed the stream and the technical analysis. Also my weird mood and humor. If you're new to the channel, make sure you like and subscribe. Make sure you tune in for all the streams. Obviously, we do have the private trade group with access to the 2 key indicators as well. If you're interested in that, you can reach out to me via email. But that is it for tonight. Thank you, each and every one of you. Share it with your friends. Watch the streams. Play the game. Protect the principal. And you know what? It's going to be a crazy couple days in the markets. Let's see what Powell says, and we'll see what happens with these charts. But we are in red alert, danger zone. We've been expecting these moves for a while. Everything is melting down. And you know what? I do expect a pop to the upside on some of this stuff, as we're seeing like a lot of oversold, a lot of pain or whatever. But I really think we got to pay attention to these things and look at them as like exit pumps. Do not want to be like accumulating positions, building positions at these levels. Now remember, obviously, this is not financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. Hit my channel up. Crash better than stocks. I'll check it out, brother. Appreciate it, man. I will. I'll give it a shot and watch some of your vids. Thank you, my dude. Definitely appreciate you showing up today and interacting in the chat. Everybody have a great night. Thank you all for showing up. This is Crypto Trend Trader with our Wednesday evening midweek market update. It is January 19th, 2022. That's it for tonight, ladies and gentlemen. I'm out of here.